Hello there, and welcome to the Bitcoin Takeover podcast. I'm Vlad, and this is season 15, episode 55, with two of the brightest minds in cryptocurrency privacy, actually. They are working on a project that's called Decred. One of them has been a prominent Bitcoin developer who actually built his own client, and nowadays I think it's still used in the Lightning Network in the implementation called LND by Lightning Labs. And their names are Jake Yocom-Piatt, I hope I said that correctly, and Phoenix Green. And we're gonna talk about privacy, we're gonna talk about what Bitcoin needs to become more private, and we're also gonna talk a bit about your background. So, welcome to the show.
Thanks
Hi,
for having
Vlad.
us.
Thanks very much. Yeah.
So, Jake, I think it was Nicholas Gregory who said that you are the biggest expert in privacy that he knows, and he always looks up to your opinions and your advice. And he is the one who built Mercury Wallet and Mercury Layer in Bitcoin.
So let's see. I met Nicholas Gregory. I think it was 2018 when I was in London, and he was a very pleasant guy. He stopped by our booth. We hung out. We talked for a bit. We had a couple pints after the conference, and that was it was a fun time. He's a friendly fellow, and he's pretty switched on. So, you know, I don't know how much of a privacy expert people would consider me, but I'm very familiar with how both our own privacy and other projects' privacy work from both from like sort of a detail perspective and from a more practical perspective.
Okay, so let's go back a bit because Decred, as far as I know, was created because you're frustrated, or not you directly, but at the time you were very frustrated with the lack of governance in Bitcoin and the slow decision making. And you're this sort of developer who was impatient to add more features, and you found your home in Decred. Is that correct?
That's about right. I mean, I started in the space back in late 2012, early 2013. I had a group of developers I've been working with on an encrypted offsite backup product called Ciphertight. The product really went nowhere, but we had a lot of sort of knowledge and skills built up, and we saw Bitcoin, and we're like, well, okay, this backup thing isn't really going anywhere. What are we going to do? So then we pivoted to work on Bitcoin, and what we decided to do is we decided to do a full node implementation from scratch of Bitcoin to re-implement it from zero. And we decided to do that after we were kind of like casting around trying to figure out what we wanted to do, and we had some questionable interactions with the Bitcoin core group where it was like, hey, we want to help you, we want to get some tests working. We want to get this working on another operating system. And it was like instant hostility to the point where it was like, wow, we didn't expect that. So from there, it sort of turned into, hey, why not? Let's basically effectively rewrite Bitcoin core from scratch. And we did that. And what I learned along the way was there's a lot of people in Bitcoin who were not keen on that kind of work being done. Even though, from a decentralization perspective, that's obviously beneficial, right? To have potentially two or more, from scratch implementations running the network. They didn't like that from the perspective of, sort of control and perception, right? They wanted to be perceived as, the de facto people whose project it was, and that anyone else, who wants to step up and do something similar to what Bitcoin Core was doing was effectively not good for Bitcoin. And so we faced things like a whisper campaign and like basically nonsense, people being told not to run our software. So that was like incredibly discouraging. But of course, I'm not the kind of person who gives up easily. So it's like that happened. And a thing worth pointing out here is that I'm really more of a project manager than I am a developer. Like I have a team of developers, and I'm the kind of person who manages things. If I steer the direction of where things are going, I'm less so involved in the day-to-day code pushing and things like that. I have people who are skilled and do that full time. So then after a while of doing that, I'm thinking like, well, I've spent a couple $1,000,000 to build out this alternative Bitcoin implementation, and it's like, well, what am I going to do? Like, there's no prospect of any income from doing that, right? It's like I did it because I thought it was a good idea and it was something that would help Bitcoin. I met with a lot of hostility, and then I'm like, well, what am I going to do? And so I decided to, pivot. And what I did is that I was actually proactively solicited by, a couple people from the Bitcoin talk forum. And so those were the two users, Taco Time and underscore Ingsock. So these two, I say identities because, who the hell knows who these people really are, or whether they're a group or whatever. And they approached me and were like, hey, we want you to have a look at this white paper. It's called, Memcoin 2. And I'm like, okay, what's this? I read it. And I read it and I'm like, okay, I really like some of the ideas in here. And they're like, we want you to build this and, run with it. And I'm thinking like, I don't know, maybe I'll do this. And so that was like throughout, between like late 2013 and early 2020 or early 2014. And then in early 2014, I finally, stepped on and I said, as long as you guys help me get the initial release and get the network going, then I will commit to doing this. And so I did that in, early 2014, and it took 2 years until we got to launch in February of 2016. So that's like the brief summary of my background. And what really led me to do this was, there were serious problems that I had sort of seen up close in ways that other people hadn't with Bitcoin. Like, for example, right, Bitcoin is supposed to be, roughly speaking, one CPU, one vote. Well, what if all of the CPUs or, ASICs get captured by one person or one group? Well, then that sort of governance mechanism, voting with your CPU becomes compromised. And then, you go, okay, well, what happened from 2014 onwards and with Bitcoin is there have been like multiple disputes that took multiple years to resolve about, okay, what are we going to do with the network? And that's because the people who controlled the CPUs or, the ASICs didn't want to do what the core developers wanted to do. The core developers are like, we want to do this. And then, the miners are like, no, we want to do that. And so I saw that whole process play out and I'm like, this is just not constructive beyond the fact that it's like, it's not sustainable. Like, who's going to pay to build this stuff out? And apparently venture capital money is the answer, or, as we're seeing, BlackRock. And that's sort of like that got me to the point where I'm like, okay, I'm going to start working on something else because I didn't like where things were going even back then in 2013 or 2014.
Yeah. Well, hopefully we can show your viewers what it looks like and stuff. But I want to say thank you for reaching out and having us on the show today. It's absolutely amazing. I mean, my part in Decred is relatively small, actually. I mean, I found it maybe 5 years ago, whilst I was just searching, much in the same way that you're currently doing now, where you're thinking.
Okay, sorry for interrupting. I realized that I muted my microphone when I said that. So basically, I want to praise Bison Wallet and give you, Phoenix Green, the opportunity to express your thoughts on this pretty cool creation for privacy and also for swaps between currencies. Sorry.
Yeah. Sorry, I lost my train of thought then. But I mean, Bison Wallet has been a massive journey actually. So I mean, just to go back a little bit, when I started looking for the project, when I started looking for a project that kind of extended on what Bitcoin was doing, I still wanted a lot of the fundamentals. But I came across Decred back then, and it was when they had Charlie Lee on their I forget what the show was called, Decred Ensemble, I think, and they basically did the first atomic swap, and they were just talking about this. And watching them do the first atomic swap was fiddly as hell. I mean, these guys were kind of fumbling over it and kind of passing keys and doing really a lot of the groundwork, but the end result was that it worked. And then a post came out from Jake on the blog that said, look, we're going to build this. We're going to build this into an exchange, and here's why. Because ultimately, the exchange is the next frontier. What you have is this lovely peer-to-peer system that Bitcoin's created, where you and I, Vlad, I can send you some money, you can send me money, and nobody gets in the middle. There's no rent seekers. There's no people kind of inserting themselves in the middle of that. And the thought process was, why should exchange be any different? Why should we be giving funds? Why should we be letting the Coinbase of this world kind of sit in the middle of every single exchange, pushing the market left and right? Why can't we make our own markets? And I really liked this idea. And there was a few other things that I really liked about Decred. So I decided to see if I could join. And my main contribution was education, actually. Find out how Decred works, find out kind of all the different ins and outs. And it really is a fascinating project. But to kind of hone in on Bison Wallet, it has been a massive endeavor. I think Exodus was saying it's cost us roughly about $1 million to this point to get it where it currently is, which is people can now set up their own wallets. They can put trades into a pair, and they can atomically swap with somebody else without needing a middleman, without needing to pay fees, without needing some kind of exchange token or anything like that. It really is currently the best version that we could have for an exchange that resembles what Bitcoin was originally trying to build, which was this peer-to-peer exchange of value.
Yeah, that's very cool because the 0.1 version of Bitcoin had a built-in but rather broken marketplace, and it was clear that Satoshi intended for this to happen. And also Satoshi intended for altcoins to exist because he encouraged the existence of Namecoin, which was actually the first fork of Bitcoin that was modified for a certain purpose, which at the time was to have domain names and assets and all of this stuff on a separate blockchain that was merged mined with Bitcoin. So it's interesting that you came to Decred and you built this in a way, basically, because I can think of what's it called, Uniswap or something on Ethereum. That one also enables these swaps, right? I'm not sure if they're atomic or not, or there's another smart contract mechanism. But
they're swaps on the Ethereum chain, if I'm not mistaken.
But there is a token in the middle. You pay
Correct.
the fee with the native currency, and you can also get a token of the protocol that gives you special discounts or whatever. So you are in a double token situation. But with your Bison wallet, you're not making people have Decred to pay as gas to enable the swap. And you're just enabling the free market to have this marketplace, right?
Yeah, well, I mean, ZCub probably put it best, and they said that it's a public good for the crypto space, and I think that resembles what exactly is. Although we've built these things, Decred actually has minimum impact at the moment. The only impact Decred has is the bond that you have to pay to actually join the system, which is like $1, and that comes back to you. So it's completely refunded. And what the bond basically does is it says act good behavior, and you'll get your money back. You'll get that $1 back. And the more swaps you make, your reputation actually goes up. So if for instance you make a dodgy trade, it won't hinder that bond coming back to you. There are some improvements to that coming, but currently that's the only area that Decred kind of inserts itself. And there's no reason in the future that couldn't be USDC or USDT. Other than that, when you're making the trades, no, there's no secondary coin. You don't need a specific platform. It's literally an atomic swap. It either happens or it doesn't. So, if I wanted to swap with you, you've got Bitcoin, I've got Decred, and you wanted to swap me, we're literally doing that. We're passing the Bitcoin from one Bitcoin wallet to the other Bitcoin wallet. We're passing the Decred from one wallet to the other wallet. And then what happens in between is you have these redemption contracts that basically say, okay, the redemption is almost ready on your side, the redemption is almost ready on your side, and now go. And that's in simple form. That's how it works. I'm sure Jake can explain it a lot better than that. But I mean, one of the biggest problems we have is it almost sounds too good to be true. A lot of people can't believe, oh, you built this exchange and you've got no rent seeking. You've got no middleman. How are you going to be profitable? And the whole concept is quite alien to people, that this, we haven't put anyone in between. So I personally think that's going to be one of our main barriers. So look, just try this. Get yourself $1 and try it. Do a swap. See how it works.
Yeah, and at this point, I actually have to present one of the sponsors of the show, who is Sideshift.ai, and they basically enable this feature of swapping, right? But they do have a token and they do have a transaction fee that you have to pay for them for providing this liquidity. Unfortunately, they don't support Decred, and I guess this is the reason why you built Bison Wallet. But there are thousands of other currencies that people use for payment. And if you want to swap that for Bitcoin, or you want to swap that for stable coins, or someone pays you in a stable coin and you want to swap that for free market money, which is less centralized than Tether, then go to Sideshift.ai, and the fees are pretty low and they have a lot of pairs and a lot of liquidity and they're cool. And thank you for sponsoring this show. And it's fascinating to me that on the website of the Bison wallet, you state the philosophy of the project. And you say that there are no gatekeepers, which means that anyone can add their own coin and run their own server, granted that somebody else runs their software. So you're enabling a free market that's decentralized and you're not in control of which currencies are listed, which I think is pretty cool.
Yeah, that's definitely the end result, is to have that. Like I said, and I say we very broadly, but I mean the Bison Wallet team are definitely building out a lot of improvements one step at a time. One of which is going to be the mesh network, where all of the different servers kind of connect to share order books, which is going to be absolutely amazing. But yeah, that's the general thing behind it. I mean, I don't know if, Jake, you want to kind of at this point and kind of explain why you went down this route with all the delistings and stuff.
I'll give a little bit of the backstory. I mean, anybody who was around during the 2017 bull market knows how crazy things got, and things became like really, really bananas. Like, oh, we want you to get, everything was about getting listed. So it's like, okay, you get listed somewhere. What does that actually mean? Nothing. It means you have some nominal liquidity on on an exchange. And a lot of these exchanges were ghost towns. I mean, what I recall too was Binance was a ghost town, and they were clearly running churn bots. There was almost no real activity on there. And I got to say this, as much as I'm not a big fan of Binance, the way it was bootstrapped from literally a ghost town to, the biggest exchange on, like in the space is like, it's really impressive that happened. Exactly how it happened and which actors are involved in making that happen, it's a little bit of an open question. But it was like a total ghost town, and they were like, oh, you need to buy 250,000 BNB tokens or whatever to get listed here. And we're like, we're not doing that. That makes no sense. And we don't need this. It's a ghost town. We're not gonna buy $250,000 of your ghost town tokens so that we can be a member of the ghost town. And then eventually they listed us, presumably because there are miners who wanted to sell their Decred. But I saw that and I'm like, this is not right. And then it didn't stop there. It's pretty much the same game at every major exchange, whether we're talking altcoin or we're talking, the fiat leg exchange places, where it's like the listing fees are like blistering. And then, you're expected to like hire a market maker, and then you hire the market maker, and then you need to lend them some comically large amount of the currency. And then if they basically juice the value of your token, well, then they have like a sweetheart deal on all these coins. So it's like the way the whole system runs is, I feel like it's incredibly corrupt, and to the point where it's like, I had it by 2018, and I think it was May of 2018 when I wrote the proposal to be like, this is what I'm proposing. I'm proposing that we make a system where the system is not here to extract rent. The system is here to let, there be a free market of ideas that is multiple projects, and may the best project win, as opposed to, you have to basically bribe people to get listed on some exchange. And you're like, how much development work was there really involved? Maybe like two months of FTE time. It's like, that's nothing. Why does it cost like $1 million or 10 million or 20? I mean, nowadays, 50 or 100 million to get listed on some of these places. Why does it cost that when the dev time, required is comically low? So it's like, that was really the motivation behind doing this. And also the front running, which is something that people who are familiar with high frequency traders, are familiar with, which is that whoever can execute first and get like the fastest feed on an order book can basically, cut in line in front of everybody else and rob them. And so we kind of got rid of that with the DEX, which is sort of the basis upon which Bison Wallet is built. So Bison Wallet is the user facing side of it, and then there's the back end piece of it where it matches swaps, there's a server that supervises it all and all that stuff in the bonds that that Phoenix was talking about.
I think we're going to do a demo of Bison Wallet later in the interview to show people how they can use Bitcoin or Decred or something else to do swaps. But before that, I want to take a step back and talk about the differences between Bitcoin and Decred, because Decred is an altcoin which was created much earlier than the ICO boom, and it has survived for 8+ years, which is something that I respect. And it still has a community, and it still has a strong core membership structure of people who still believe that Decred is going to change the world, which I think is incredible. I think also Decred was one of the first projects to enable voting. And when I first read about Decred in 2017, I remember thinking that it's basically my sophomore year fantasy from university, when I realized that why do we need politicians at all when we can just have an app on our phones and vote for every issue and express our opinions and replace representative democracy with direct democracy? And somehow Decred reminded me of that. But I'm gonna let you define it and describe it in your own terms, because I think it's still pretty interesting, and the fact that it survived for so many years makes me respect it.
I think that the deltas, I'll just give a quick summary of the deltas because I can ramble on for too long, but the top level stuff is first the consensus algorithm, which is pure proof of work. That's the Bitcoin game. The problem with that is that ends up rigged in the sense that the economies of scale and then the realities of manufacturing ASICs boil down to, who can make it cheapest in China or Taiwan. And that's pretty much it. That is, everywhere else is going to struggle to compete. So proof of work, it was egalitarian. It was a great idea out of the blocks for Bitcoin, but then it very rapidly degenerates into who can get as close to the silicon and to the money you need to make the silicon as quickly as possible and as cheaply as possible. And that pretty much is China. And so, this algorithm that was supposed to create a fair way to distribute the coins ended up creating an incredibly unfair way to distribute the coins. So proof of work went from a great fair idea to a dumpster fire, in my opinion, pretty quickly, in a matter of several years. So by 2013 or 2014, most people didn't realize it, but it was already a dumpster fire. Even I didn't realize the extent to which it was a dumpster fire in 2013 and 2014. And it's one of my, I would say core regrets, at the time of not really understanding how that whole market worked. So what we did is we changed that and we hybridized it with proof of stake. And we did that so that the staking system is a sovereignty system. So instead of it being one CPU, one vote, it is one CPU, one vote when you're mining. But when it comes to decisions for the project, it's one coin, one vote. And so it's a coin-based voting system, and you opt into the staking system. So that sort of fixes what I viewed as the major governance problem with Bitcoin. Then if we keep going, then there's things like funding. So another major problem with Bitcoin is, okay, who's going to pay for it? Because building cutting edge technology takes money, it takes time, it takes energy, it takes man years of work and focus. And when you throw a few $1 million at it like I did, and you have no prospect of getting any of that back, that's like it's incredibly demotivating. And then you go, okay, well, who's going to fund it? It's like, well, venture capital will fund it for a while, and then, maybe BlackRock will fund it for a while, but it's like, where do you draw the line? And then also, like, is it good for the network? Is it bad for the network? Did somebody buy out the network? So that's I'd say that's the second piece. And then the third piece that I think there's 3 or 4, but the third one would be privacy then, which is, privacy is a major problem, right? If you can always tell who owns what and where all their assets are, that's not a very sovereign system. So sovereignty, unfortunately, in our technological age has come down to privacy in many ways. So there are entire projects that focus exclusively on privacy. And the reason they do that is because privacy is a major aspect of sovereignty. Are you truly sovereign if somebody knows where all of your money is and can extract it from you or threaten you with it or things like that? So that was another missing piece that we added. And then, as Phoenix has explained about, say, Bison wallet, and then the DEX that sits underneath it is free exchange of these coins, both Decred and Bitcoin and other things. So that's another major, that's sort of like a cross-project pillar of the space that I view, which is, the free exchange and free flow of sovereign money. And, all of these things taken together really stand to distinguish Decred from Bitcoin. So it's sort of like, when Bitcoin started, I feel like Decred is what it should have become. But because of things like, the people involved and egos and, everybody trying to fight over nonsense, it never really happened. Like, the sovereign revolution could have just continued with Bitcoin. I mean, the same thing happened with, say, Ethereum, right? It's like, oh, I went and created Ethereum because the guys on Bitcoin wouldn't let me do my thing. And so, this process of creating sort of like the sovereign future where, people, for example, you can't screw with people's votes because they're all online and are all cryptographically secured. That future is unreachable unless you basically keep moving towards it. And I felt like Bitcoin stopped moving towards it almost immediately after launch. It was like, oh, this, sovereign money thing, it's sovereign enough, let's stop here. And then, and then that's sort of like, where Bitcoin ended up being. And then, to move really beyond that, you need to add a whole bunch of stuff. And that's sort of what we did.
The average Bitcoin maximalist right now is going to listen to your speech and say, if you're right and you have built something which is technologically more advanced and smarter and something which fixed the issues that Bitcoin has, why did the market respond in such a way that Bitcoin is still number 1 and Decred is 200 something? And they're going to put some price chart and say, Decred went down across this time frame. And therefore, everything that you've built is relevant. So how do you respond to that?
I have a pretty good response for this. So these are the things. And so remember how earlier I said if there was one thing that I regretted, it was not listening to the advice that I was given about proof of work. So when we launched in 2016, we had a mix of 60% proof of work reward, 30% 30% stake, 10% treasury. And the treasury at 10% has been absolutely fine the whole time. I was originally suggested to go with 60% stake, 30% proof of work. Now, I regret this, and I'll explain to you why. And this is also something that I feel like people don't understand about the crypto space, is that due to this monopoly on ASICs, which is effectively held by China or people who have allied with China sufficiently closely to get their hands on these ASICs, due to this monopoly on proof of work and ASICs, what ends up happening is that every project besides Bitcoin that uses proof of work has ended up having basically predatory miners involved from launch or from very shortly after launch. Now, when I say that Bitcoin didn't have that, early on, there were a lot of people who just mined Bitcoin because they thought it was cool. They're like, oh, I'm going to run CPU mining on my computer. This is cool. Or I'm going to run GPU mining because this is cool. Well, very quickly, it consolidated to be like ASIC farms and GPU farms and stuff like that. And when it gets to that point, that scale is like, that's something that I think people just don't grasp. They still think that proof of work is a good way to distribute coins. Here's what we've learned the hard way. miners accumulated an enormous amount of Decred very quietly using ASICs and GPUs. They then took those coins and used them to manipulate the markets for Decred. That is, that technologically, our tech is rock solid. No one has ever like blown up any piece of our tech. Our project has never like, fallen apart. Our tech is solid. But, when it comes down to number go up, the NGU game, if someone is malicious, like say a mining cartel, they can control the price of an asset once they get enough of it. So think about it like this. If somebody mines enough of a coin, they build up a bully stack. Like let's pretend someone had mined 7 million Decred. Then in order to get positive price action, that miner cartel must be benevolent. That is, they must want the price to go up. And B, you have to work with them. At no point were we able to work with these people. And basically my observation, and I've gone through some of the on-chain analysis work with a group of other people, and what we found is that the price action is almost entirely controlled via Binance and via the miners who supply coins to Binance, and it's a depressing reality. And so to say that our technology isn't relevant because we don't have the positive price action of Bitcoin, it gets old. And I would argue that the technology isn't irrelevant, but it reflects basically the extent to which, in my opinion, proof of work is just complete garbage. That is, that you go, okay, well, what about proof of work? There's only a few projects that have managed to, wrangle proof of work to their advantage. And I think Monero is actually one of them. Because by targeting ASIC resistance for basically the entire lifetime of the coin, they've managed to mostly avoid, not entirely avoid, but mostly avoid this, mining cartel controlling the price action on the market. So that's where, that's how I feel is like, hey, I would obviously like to see better price action on Decred, and I think there's a lot of people who would, and a lot of people who have historically. But when you're dealing with a powerful adversary who has an enormous amount of inventory and they're malicious, I mean, there's only so much that can be done. So I'm good at building stuff. I'll keep building stuff, but that's sort of the reality of Decred. As much as I know people say, oh, your price action sucks, so you're not relevant, and it's like, well, if you're dumb and you think that price action is the only thing that matters with cryptocurrency, well, yeah, then it's irrelevant.
Yeah, but the question is, because you have this whole game theory situation, and everyone assumes that if someone mines a coin, then it's in their best interest to pump the price as opposed to try to manipulate it. So if there's a cartel that accumulates a lot of it, what's the point of holding on to it and making the price go down when they can actually make a lot of money by being positive about it?
Well, that's an excellent counterpoint. But this is exactly why I say this is a malicious cartel as opposed to a benevolent cartel. A cartel that cares the most about profit and their net gain would do precisely as you described. They'd let the price float upwards. They would then slowly sell into demand, and they'd be like, oh, this is a great investment. I'm really happy with this. But for whatever, for one reason or another, maybe I didn't say the right things. Maybe I didn't kiss the right rings or something like that. But what it comes down to is that this process, I'm totally with you. That is, originally I was like, why would the miners do this? Because it means they're losing money. It means they're not going to make as much profit as they would otherwise have. And so I think that, it's an excellent point to raise, but it also, to me, speaks to the malice of this process. And then here's another way to think about it. What we've observed is that this cartel, actually, the way they operate in Decred is historically something that is, there's nothing specific about the way they operate Decred-wise, which then begs the question, what other coins are they doing this in? As far as I can tell, I mean, I would be unsurprised to learn that the vast majority of proof of work cryptocurrencies have this player in it. And, my best guess at this point is that it's Bitmain or some Bitmain affiliated entity. And if you can think about it like this, if you have this massive cache of coins in all of these projects, Bitcoin, Decred, Litecoin, you probably don't have as much Monero because it's harder to mine, right? And then like they have all these other coins, which is what they can do is they can pick winners and losers. And for whatever reason, we were not picked as a winner, and then they can selectively elevate the ones that they want to win, and then they can selectively push down on the ones they want to lose. So it's like, I'm with you in terms of the incentive. That is, a rational actor would most definitely want the price to go up and to exit at a maximum profit, but that is most definitely not what we have observed with Decred.
Yeah. I haven't heard this side of the story, and it does make me think about the intentions of these miners, because they do manufacture their ASICs, and they do end up holding a lot of the coins, and there are some conspiracy theories, I don't want to call them anything else, that say that they use the ASICs before they ship them. So in the case of a coin that's about to get its first ASIC, it's pretty common to hear these rumors that these companies that build the hardware are using the devices to mine themselves before they ship them, and most likely they ship them in a state that is not very reliable. So they're gonna break down pretty soon, and you have to order new ones.
This has been going on since 2012, since the first miners came out. This has been the same problem since zero. As much as it's one of those things, it's like, yeah, prove it. Well, the way it's been relayed via some people who are miners in our project chats is, people have been receiving dusty miners ever since the miners were a thing. So basically 2012 onwards, people would get a miner and it's like all dusty. And so that's an obvious sign that this thing has been running. No one's just going to let this like get all dusty in a warehouse. They're going to plug it in, turn it on, and use the machine to make money. Then when when it doesn't make as much money, that's when you can buy it as like a normal person. So unless you're an insider, you can't get access to the latest and greatest, or you can, but probably at a massively elevated price.
I think it's in the documentary The Rise and Rise of Bitcoin that you have this character who is the narrator, and he presents whatever he's doing, mostly in 2013 and 2014, and he orders his first ASIC miners from Butterfly Labs and Avalon, and the ones from Avalon arrive too late, and by the time they get to his address, they are not profitable, and there is no way for them to make back the amount of Bitcoin that he spent on them, and the Butterfly Labs never come. So I think
there were times I used to run booths before I've taken a break from running booths and doing trade shows. I used to go to these trade shows back in like 2013, 2014, 2015, and I would see the Butterfly Labs. In fact, there were a number of trade shows where my booth was like one or two booths away from Butterfly Labs, and it was just always so sketchy. So sketchy. So it was like I'd look at this guy for hours a day who's sitting at this booth, and it was like they'd send somebody there who's just a salesperson, and like that was it. I mean, it was just like it just seemed like straight up fraud to me, based on the reports you then read, to be like, so when did you receive the machines? And people are like, oh, I never got the machines.
If I can interject just a little bit, we should probably caveat that based on this research that Jake and a few others did about 2.5 years ago, using our voting and governance system, we actually decided to start a process that would actually claw back a bit of this control. So the initial part, the initial consensus upgrade. Jake, did you want to talk about that?
No. Go right ahead. Go right ahead. Go run the ball up.
Yeah. So the initial upgrade, which was just about just almost 2 years ago now, basically said, look, let's reduce if there's a cartel, if there's a cartel happening, we don't want to get into too much conspiracy. Let's start dealing with this so we can start reducing the amount of coins they can do, so we can start finding some real price action again. So in the initial consensus upgrade, it went from, or Jake, you have to remind me what the spread went.
60% to 10%. That was the first one.
Yeah, so it went, the reward that the miners would get went down to 10%, and that ran for about a year. And more research was done, and they were still ridiculously profitable at 10%. So then the final one took it down to 1%, which now we are starting to see this reduction in sell-off. And if you follow the coins, you can actually see the way that they bounce through all the different exchanges and where they come from to kind of mask themselves. Another interesting point, if I can interject, is the actual original DCR DEX was the reason we found this out. And I mean, do you remember how we found that out, Jake? Based on how they were selling the
Yeah, what
coins?
ended up happening is that there was a lot of bidding on DCR decks, and it was sustained bidding. So several million DCR, like I think it was like 3 million DCR, flowed through decks, and it was bought, and that's all that that's what we could see. Well, then you start to ask the question, where did it come from? And a lot of it came from Binance, but then an unusually large amount of it came from exchanges that I never would have expected it to come from. It came from, what is it? Gate.io. It came from Wobi, which was basically, Wobi was a ghost town, a ghost town to the ghost town for Decred trading. But then something like 800,000 Decred flowed through Wobi, and then it went from there to the DEX. And then it was a similar thing. What were the other ones? Is Gate, Wobi, what is it? OKX. I'm trying to remember the other ones. I can't remember the other ones right now. But those three basically, what ended up happening is that then you start to look, okay, where did those coins come from? They came from miners. So basically, miners were effectively using Chinese exchanges to launder their mined coins, which would then bounce to either Binance or to the DEX. And then, it was a never-ending flow of these coins. So that was what we observed basically between late 2020 and I think it was like, basically through 2022. So that process is like, it was non-trivial. So these claims I'm making are not just idle claims. These are claims backed up by on-chain analysis and cluster analysis that was done on the coins that flowed. And then you'd find things like, okay, oh, well, here's this cluster. And then it's like, well, then there's little mining rewards that flow to it. And it's like, well, whoever's doing this is mining. And the only way you can mine is if you have ASICs. So whoever's doing this has ASICs. So, and one thing that I got to say that I learned that I had no idea about was that a lot of exchanges out there really are effectively money laundering operations. And you see that by merit of how people will trickle funds into the exchange and then out of the exchange. And so they'll bounce, it's basically a relay. So instead of it being like, I deposit the coins and then I sell them, it's like, no, I just deposit the coins in my account and I withdraw them. And then what does that do? That creates plausible deniability for there being a custody change. So like normally you'd think, oh, a coin flows into an exchange, that's person A, coin flows out of an exchange, that's person B. I don't, after seeing what I've seen, I don't think that that's how it works at certain exchanges.
So back to the original question about the Decred tech. One thing that came from one thing that came from all this though was how quickly the Decred project could pivot. They could change that. They could change that distribution of rewards, and it was actually fantastic to see the way that this stuff was built out. The vote happened. The stakeholders voted. And that's real power to the coin holder actually. And you imagine having if another project like Bitcoin found out that this was happening on them, how the process would look, how hard that would be to actually resolve. So I think, in terms of the actual technology and the voting and the governance, I mean, that was a real test of its power actually.
Yeah, I mean, we have yet to see the positive price action side of restricting the mining rewards, but we made a best effort to try to address it took a couple of years to identify what the real problem was, but once we identified it, we pivoted. So we pivoted. Now we're just sort of holding our breath and like hoping, hey, I hope we pivoted soon enough. So that's sort of where things are at with the mining game. And I mean, this also, in my opinion, speaks to the extent to which proof of work is it was great in like 2009 to 2012. It was a great way to distribute coins, and it was fair and it was egalitarian. And then it basically became a dumpster fire real quick once people are like, oh my God, I can manufacture machines that make money. Oh my God, and then it just turned into everybody's getting dusty units. There's fraud. There's all kinds of games being played.
Well, yeah, but it is interesting how mining has evolved over time because proof of work is much more dynamic than proof of stake. In proof of stake, you have people who buy a lot of coins, and most likely they hold on to them for a long time because they have very little reason to get rid of them. They're making money, it's like earning interest. But in the case of proof of work, you have to constantly adapt. And if you're not profitable, you're gonna see yourself run out of business, and there's gonna be someone else picking up the ball and finding some village in Africa, or going to South Asia, or going to Ukraine. Or my girlfriend is from Iran, and the electricity is very cheap there, but it's difficult
I thought they
to.
banned mining there, didn't they?
I think they did. I'm not 100% sure, but honestly, if I was in a country like that, I would look into mining, possibly something like Monero, to not get caught. But it is very interesting how mining evolves over time and changes, whereas proof of stake is more conservative in terms of coin ownership, and maybe it's better for price stability to have proof of stake. But overall, I think proof of work is fairer.
Yeah, I mean, that's what I used to think. And after having seen what I've seen, I think that in a cryptocurrency like, let's take Monero, because I think their ASIC resistance is best in class. In an ASIC resistant cryptocurrency like Monero, I would say that proof of work is a lot fairer than it will be pretty much anywhere else. But then once you start getting into these things where you require these ASICs, then it becomes incredibly unfair. That is, that the only people who have access to that are people who have like big capital, and just like you pointed out, can like geographically arbitrage and be like, oh, it's cheaper to run in Kazakhstan than it is to run in China anymore, so we're going to move to Kazakhstan, or we're going to move to Iran, we're going to move to Southeast Asia, or wherever. And the only people who can do that are people with like huge money. So I would say that in that way, once you get into the ASIC game and it becomes entrenched, then it becomes really unfair. But hey, everybody's got a different opinion. That's just mine.
I think so. I mean, if you look at who's actually earning money from mining, it's not you or I. It's somebody else, isn't it? And that's when you talk about fairness. I think that's a valid point, and it should be a game that everyone can play. And you look at the Bitcoin situation, and actually most other ASIC mined projects, it's impossible for the average user with a couple of grand's worth of hardware to actually participate and earn money. So I would kick back on that bit. And ultimately, one of the reasons I actually went to Decred is because I didn't want to just hodl. I don't see why the amount of inflation that's happening on these coins should happen, and I shouldn't see any of those benefits. And that's one of the reasons I wanted to find a way of getting interest. And to be fair, even Decred at the time, there was no way I could afford the £2,000 ASIC machine and have it running at something like a couple of £100 a month to then earn it when I would have been front run by these big companies. Like you said before, and I know Charlie Shrem said on your last show, that these machines were being well and truly used as the difficulty went up, and then sold off once the difficulty happened. And this is a game that's being played, and I don't think we should kid ourselves. These games are being played, and the idea that it's fairly distributed is kind of a little bit of a fallacy at this point. Because if you physically yourself can't run an ASIC, how's that fair? How's it fair that you're holding onto one Bitcoin whilst there's still like 3 million to be produced, and you're not seeing any of that interest? That's just my take.
I mean, another way to think about proof of stake too is that you can think of it as what you're doing is that instead of having a piece of hardware that you have to buy and meet space and you have to order and then you have to supply electricity to, proof of stake is a way of everyone being able to go, listen, I have some coins, and I'm going to take my coins, I'm going to have like a coin ASIC. That is that, my coins mine for coins, and that's something that's accessible to most people, or to more people than the ASIC game.
And also on Decred staking, most solo miners are running full nodes so that they can keep the communications ready for when their tickets vote. So it's not like they're doing nothing. It's costing roughly about $30 a month to be a solo miner, as I understand it. And if you're not solo mining, using one of the providers, you're still paying like 0.5% for your ticket. So it's not a completely free game.
Yeah, but let's think about this. The adversary of your system ultimately is the nation state. I think there must be some nation around the world that's gonna want Decred to not exist. And of course, they cannot shut down the computers of the people using it, but they can acquire a very large stake by purchasing it over a long period of time with money that they print. So of course they're gonna pump the price, but they're also gonna end up controlling the system by having a large stake. Is there any mechanism that prevents them from basically owning 50+% of the stake by doing this with money they print out of thin air?
There's no good way to fully stop an adversary who would try to buy up, say, all of any proof of stake asset. That's entirely possible. But on the flip side, the same thing, and as far as, in my opinion, it's already happened with proof of work. That is that, people think proof of work is this decentralized thing. It's nominally decentralized, but it's like who makes the ASICs, and then who runs those ASICs? How spread out are the ASICs? Who owns the companies that operate the ASICs? And so, there is something to be said. There's always a risk of someone buying up all of whatever asset and controlling it, whether it's a stock or, a corporation or, a commodity. So these things can and do happen. That is, any asset class that exists on planet Earth can be cornered by people who just print money. Like, if the US government wanted to buy a whole bunch of Decred, they could. And then, it becomes a game of going, well, would people sell it to them? Would enough people sell their Decred, to such an adversary and let them, just take it all? I mean, my read especially with proof of stake is that there's actually a pretty strong incentive to not sell out, because you have a stake in the system. And if somebody comes along and buys up a whole bunch of Decred and then starts staking it, I mean, I would expect the value of your Decred to go up immensely, in a way that if there's one thing I've learned from the cryptocurrency space, is there's a lot of people out there who like to hold. They don't, they're not looking to just dump and buy a Lamborghini. I'm not one of those guys. I've never been one of those guys. I drive like a pretty normal car, and I always have. And so, this idea that it's like, I'm going to get fiat rich and dump, and then, like some adversary is going to take over a proof of stake coin. It's possible, but I would say that it's highly improbable as a legitimate threat in terms of like basically killing a project or totally corrupting a project. Because in my case, I can speak to this, which is that maybe I'd sell a little bit of Decred, if the price was really high, but it's like nobody's going to come along and twist my arm and make me do X, Y, or Z. It's like I'm a man who will go down with the ship kind of guy. So it's like if somebody comes to try to buy everything out, it's like I'm not for sale. That's how I roll.
I think what's happening right now with Bitcoin is that you have this institutional setup, which is a very safe way for Wall Street and a bunch of other bankers to buy Bitcoin OTC without affecting too much the price on the market, but they're able to crash it whenever they want. So they make sure that whenever they generate a degree of scarcity, they're going to sell off in a way that does not change the price or does not make it go up very drastically, but they can make it go down very violently. And it's been interesting to watch what's been happening with the ETF, because the expectation was that they were going to buy a lot of coins, which they did, but in a way that also had proportional sell-offs. And everyone expected $100,000. It hasn't happened. Maybe it hasn't happened yet, but I'm not very bullish, granted the political climate and the fact that Bitcoin is becoming more entrenched with the status quo and the political system, which some people say this is mainstream adoption and this is the hyper-Bitcoinization that they have been preaching for years. But I think it's very fragile, and Bitcoin was not built for the purpose of being politically fragile. It was created as suggested by the Genesis block inscription, which says Chancellor on the brink of second bailout for banks. It was created specifically to be an opt-out mechanism, but now it's sort of correlated with the rest of the stock market and bonds and stuff like that. So it's just another financial asset. How does Decred perform in terms of being correlated? Does it go up and down with Bitcoin, or do you have independent or at least uncorrelated price action?
Just to interject on what you were just saying about projects being taken over. I mean, that's pure proof there, isn't it? That you've actually got the banking system now is owning millions of these Bitcoin coins, and that they were never supposed to. And I think that to just kind of finalize on that point is it can happen to pretty much every project if there's an interest there. Sorry, what was your last question? Sorry.
Well, I mean, in terms of what's happening with all this price action and with Bitcoin, is I think that it's inevitable to some extent that big institutions want to get involved. What I find kind of amusing about this whole thing is that my read is that, say, until pretty recently, the game was miners were the ones who were in the driver's seat very much, right? Because miners had all the coins. You could take the coins to an exchange. You can push the price up and down because you have more coins than almost anybody else. So big, large-scale miners or mining outfits like Bitmain had the ability to do these things before. But what we're seeing is now we're seeing the U.S. via these ETFs like encroaching on the control, right? The what is it? The infinite amount of money that you can print up and manipulate things with. Well, they mined it, and then there you go. Now you can manipulate it up and down because you mined it. But then if you, just like you're pointing out earlier, is if you have an infinite amount of fiat, well, then you can basically start grabbing you can just go and start buying that and then do the same thing. So I think that there's a lot of incentive for the powers that be, basically Western society or the US government, to put a big damper on Bitcoin, because if Bitcoin continues ripping upwards, it really undermines the value proposition for what I see as massive Ponzi schemes like the US dollar. So if the US dollar is sort of exposed as a scam that it is, that's a huge problem for US, power projection. So there's going to be a lot of people, banks and, ETFs and, the whole fiat financial world. There's a lot of incentive to control Bitcoin. That is, okay, they can't get rid of it. They can't ban it easily because of, the First Amendment in the United States. They could ban it other places more easily. But things like, freedom of speech in the United States and like the Fifth Amendment and, you combine all these, the Fourth Amendment, makes it very hard to shut down something like Bitcoin in the United States. However, if you can't shut it down, next best thing is to control it. So I think that, what I've always interpreted the ETF stage, I knew this was going to happen at some point, but as soon as these big fiat financial players get involved, it's the pivot from going, we're going to ignore Bitcoin, to now we have to get involved because we feel we need to control it, because if we don't, it will end up controlling us. So I think that, in the context of this, what we're going to see is a similar pattern repeat with other crypto assets. So after, in 2017, I felt like there was this like surge into alts, right? And what that was like venture capital money and like West Coast types thinking that they're going to get ahead of the game by, I'm going to invest in alts before somebody else does, right? Well, that was too early. Basically, Bitcoin had to grow to the point that it is now, to get to the point where it's starting. We're almost to the point where I think these bigger players are going to see like, oh crap, there's a whole fleet of these things coming. It's not just Bitcoin, and the extent to which you can capture something is it's measured by things like how easy is it to get a control of people. And for example, if BlackRock is funding development, I would really question someone like BlackRock getting involved, with Bitcoin development. They're not there to help. They're there to get control. And I think that proof of stake actually works better in that context, because this was part of my experience with Bitcoin is that Bitcoin is basically, run by its developer central planning committee. And what do I mean when I say central planning committee? I mean a committee that does not have skin in the game and makes decisions for everyone else. So it's one thing if, say, let's say you own 10% of the coins and then you make big decisions. That kind of makes sense, because if you F it up, it's your money on the line. You are going to lose big if you screw it up. Whereas if you don't own any Bitcoin or whatever the asset is, and you're up there making big decisions and no one else has any say in it, that kind of a system is sort of, it's built to fail, and it's also easy to capture. right? If I'm going to show up and I want to capture a group of people who are in control of something, I just find more talented people, I pay them more money, and then I, artificially inflate their importance, like say, like my name was Michael Saylor, and then you boost them up, you hype them, and then boom, they're in control, and you didn't even have to spend that much money. You spent maybe a few tens of millions of dollars to hype some doofus who's like, now he's like the figurehead, and then you control the figurehead. Boom, you're done. As opposed to a proof of stake system where it's like, oh, you got to go in there and buy all the coins now, and it's like that gets expensive really fast. So it's like, I'm fully, my perception is that this process of compromising Bitcoin that's ultimately what sort of drove me out. Is I perceived, and everybody's got a different opinion, I know some people get like hyper defensive when I say this, I perceived that compromise process was occurring in 2013 or 2014. And that's why I was like, I got to do something else. And I think that, any of these systems can be compromised. It's just a question of how expensive is it to compromise and who are the people involved? Because, if there's unethical people and they're just there for the money, they'll sell out in a heartbeat. And then that thing's dead.
Yeah, on the topic of how you compromise a proof of stake system, is it also possible if someone is staking from home, which is obviously a more decentralized setup, to seize their hardware and take the coins that they're running with the software and do this for maybe 1,000 people and get a majority of the stake?
Phoenix, you care to comment?
Well, if they were going to go that hardcore, maybe. There are systems in place, as I understand it, where you can actually run it under Tor and things and disguise yourself in that respect, or run it through a VPS where the actual the provider doesn't actually hold your coins. So if they took the provider down, they wouldn't actually get access to your coins. If you are solo staking from home and they come into your house and whatnot, then yeah, I'm not really sure. I would imagine that they can be like a robber, and take whatever they want, really. If at gunpoint they can do pretty much whatever they want, right?
My perception, right, is that Bitcoin and Decred and all these cryptocurrencies are forms of sovereign money. When you have sovereign money, you have to be ready to deal with threats. So sovereign money, like, you have physical gold. Somebody can always, rock up with a handgun and put it to your head and be like, give me all the gold. And so, what does that mean? That means that you need to take personal responsibility for your defense and for your countermeasures. Sure, people can show up and grab machines, but it's like, are they running disk encryption? Will the machine switch off if you do the wrong thing? Is there a decoy wallet? There's like an endless series of questions like this that can go into the game of trying to get physical control over someone's digital assets. And of course, it all ultimately comes down to computer hardware. And so, I've been an advocate of this ever since I got in the space. I always advocate for strong physical security. And I think a lot of people focus on like a hardware wallet. I think hardware wallets are they're kind of junk, but that's me. I'm a computer security nut. I've been doing this for 20 years. And, whether it's disk encryption or, encrypted communications or whatever, I go the whole nine, and, most people don't. So I think that there's a silver lining here, which is that you have sovereign money. Well, guess what? Now you gotta like raise your skills with the computer OPSEC. So it's a way to incentivize people having better, computer OPSEC. So I think it's a better failure mode than having everything with, like BlackRock or whatever, right? Or some ETF, or some investment fund. So it's like, the current failure mode is some big, Charles Schwab goes tits up, and then all of a sudden it's like, oh my God, like everything I've ever earned is gone. That's way worse, for basically on an organization by organization basis than on an individual by individual basis. They can always go door to door and threaten to kill you and take your stuff, but that's a lot of work. And then hey, how do you know you didn't get my decoy wallet? And there you go.
Yeah, at this point we have been going for 1 hour, and I have to present two other sponsors of the show. And I do like to say that my podcast is rather optimistic and aspirational, because the two of them are trying to present different visions of what Bitcoin can be. The first one is called Starkware, and they're building ZK rollups. Right now, they're on Ethereum. And if they do get a Covenant soft fork on Bitcoin, they can build their system, which grants pretty good privacy and scalability with zero knowledge proofs, and also allows, for example, mobile wallets to synchronize within seconds just by verifying a zero knowledge proof. So it's pretty avant-garde cryptography, and they want to bring their system to Bitcoin. And if you want to learn more, because they don't really advertise any soft fork, that's Bitcoin politics. It's these monks, as you said, Jake, without too much skin in the game, who are trying to gatekeep what goes in the code base. So just go to the Starkware website and you're going to find their vision in regards to joining Bitcoin and having their system adopted by the Bitcoin network. And there's also Layer 2 Labs, which is building drive chains. These are two-way pegged sidechains, the way that Blockstream promised 10 years ago. And there are some differences in the sense that they do empower miners more, but they can also bring sidechains for pretty much every use case, so that you can even have a Decred sidechain if that's what you want to, or you can have an Ethereum sidechain or a Zcash sidechain, something for privacy tokens, prediction markets, pretty much every use case that you can imagine. You can have these sidechains that are protected and enforced by miners. And you can go to layer2labs.com and you can download the demo software, and you can run that on the Bitcoin Signet to see exactly what the user interface looks like. And I guess in that situation, we're gonna have a need for atomic swaps. And I gotta ask you, because I'm segueing from the ad into an actual question. I know that Decred has a pretty functional implementation of the Lightning Network. And first of all, I gotta ask you why. And secondly, I gotta ask you about reliability, because the last time I tried Lightning, it failed a couple of times when I tried to send a payment. And yesterday, Donald Trump indirectly bought a cheeseburger with the Lightning Network using Strike. And it was not the instant, seamless experience that everyone advertised. As a matter of fact, his assistant or something was thinking that maybe it's gonna fail, and that could have been very embarrassing. But as far as I heard, so Nicholas Gregory told me this, that your Lightning implementation is much better, and I'm trying to understand why.
Phoenix, how about you take a first cut?
I think we talked just slightly before the show started, but we do have Lightning, and my experiences with Lightning before Decred's Lightning was horrible. I've got to be honest. I tried several implications. I just couldn't get it working. And then, what was it, 2 years ago, Company Zero and Jake and his team, they came out with Bison Relay. And Bison Relay is basically a novel take on what can be built off chain with Lightning. So the idea is we want privacy, but privacy doesn't just happen with our transactions; it happens with our communications. So Bison Relay allows us to be like hyper private with our communications. So we've got direct messaging, we've got group messaging, we've got Lightning tipping, all done in Bison Relay. And the way initially that the Lightning Network is used is to kind of say, okay, well, you send one atom, which is one Satoshi, and you can send a message, and we can send messages backwards and forwards, and absolutely, it's absolutely amazing. I mean, the technology behind it is fascinating. So what Decred did a long time ago is they built out their SPV clients, which is lightweight wallets, which basically allow you to run the chain in a lightweight mode. So you verify all of your own transactions. And I believe Bison Wallet is about on downloads about 500 megabyte once you synchronize and verify all the transactions. So straight away, it's a really light solution for the Lightning Network, but it also allows you to be non-custodial. So all these solutions that you're seeing on Bitcoin, where they are proper custodial, we don't really have that because of this SPV implementation. So we've got this light wallet. You can set up your own channels, and you can literally use the Lightning Network. Now, what Jake and his team did is they actually built a couple of more centralized components. So the components are the BR hubs, which is the Lightning hubs, and the Lightning liquidity providers. And by connecting to these hubs, you can actually make finding people on the network a lot easier, and you can also make receiving liquidity a lot easier. And it's a fantastic product, and it works. I mean, amazingly. If you want to try it out at any point, you just let me know, and we'll get you started so you can try it out for yourself. But before using Bison Relay, honestly, I had a horrid time with Lightning. I'm probably the same with it as a lot of people in that respect.
Well, so just to give you a sense, is I think that part of the challenge with Lightning Network on Bitcoin is that the use case that, like, basically the average person focuses on is like, I want to go to a store and spend 50 cents or $1 on some item and pay right away and then get out of the store. That's a tough one to execute because most stores want to receive US dollars. That is, most stores are basically, some facet of a large public US corporation, and their balance sheet is in US dollars. They're not going to hold, they don't want to receive Bitcoin. So what ends up happening here is that in order to sort of bridge this gap and to grow this, the Bitcoin economy, there's a huge incentive to have fiat gateways, so that, for example, you can send someone $10 worth of Bitcoin over Lightning Network, they receive it, and then they get $10, and then somebody else deals with processing or handling or exchanging the $10 worth of Bitcoin that showed up on the, on their side. So that desire, that focus on exchange and integration with like random, bricks and mortar stores all over the United States and, in El Salvador or wherever, that focus has basically led naturally to these custodial Lightning services. So there's an enormous number of custodial Lightning services. I mean, I think I've seen estimates that on the client side, at least, not on the server side, but on the client side with Lightning Network, people who are consumers, it's like 90% of that market is with these fiat custodial services. And the reason is that no one wants to deal, like, basically, instead of like try to improve the UI and UX of the onboarding with Lightning, everybody just wants to just turn a knob and boom, you're ready to go. There's literally no way to do that and have it be sovereign or self-custodial. So that is with, I feel like that's what Phoenix was getting at with the SPV component. So in the case of the way we use, we use Decred Lightning Network, is we make a point to use SPV. So that's whatever it is, simple payment verification. And what that is a combination of the block headers, which even a mobile phone can check, goes through and checks all the block headers, and then it looks through for filters, and then the filters allow you to avoid downloading whole blocks unless it matches a transaction that you're looking for. So it's basically a really thin way to get all the data you need to sync a blockchain. And we're talking like maybe it's 10 minutes the first time you do it, and then it's like, seconds or tens of seconds every now and again when you open the thing. So that, I feel like SPV support for, in conjunction with a Lightning wallet and a normal on-chain wallet, that's a super key feature. And I believe we had it in Decred well before, we didn't have it before Bitcoin, but then I think it was only certain wallets used it for Bitcoin. I'm trying to remember which wallets used it. I want to say Neutrino from Lightning Labs used it. And then I don't know about everybody else, but like I was saying, is that other people, other organizations that made these wallets were unwilling to do the SPV thing. They're like, no, we want people to literally click and go. So in an effort to create a better user experience and over focus on sort of the make it happen, bang, most of the client side of this stuff is custodial, which is, I think, really unfortunate. And then, but the good part is that the server side is not custodial, so that's good. And then, there's LND running in a lot of those places, which is based on BTC Suite, which is work that I did back between 2013 and 2016 with the developers that I work with, and that's great. And then there's Lalu is the CTO of Lightning Labs. He's a really great guy, super personable, one of the brightest people I've met in the space.
You mean Olaloa?
Huh?
Olaloa, or what do you call it?
Yeah, well, he goes by Lalu, but
Roast beef on Twitter.
Huh?
Roast beef,
yes.
Yeah. He speaks very fast. He's like a rapper.
Oh yeah, he is one of the fastest English language speakers I have ever met. So I mean, I think that there were a couple Indian dudes that I was in grad school with who spoke like almost as quick as he did. I think he might be the fastest talker that I've ever met. Um, but so what's different about Decred is that the way we chose to use Lightning Network, and what stands out is, rather than focusing on, hey, like, small transactions at bricks and mortar businesses, which is obviously, that's great, it's a very legitimate use case, but in our case there's not a whole lot of demand for Decred in that context. So then, well, how did we end up using it? We use it as basically in a, I think the best way to describe it would be in a, what the hell is it called? He called it hash cache, right? So when Adam Back created hash cache, the original vision for it was to create a way to make denial of service attacks and spam expensive, right? So if you show up to a mail server and you're going to submit a whole bunch of junk mail, you have to do a little proof of work for every one of those that you submit. And then that makes it prohibitively expensive or difficult or CPU intensive to send junk. And so the idea is that it's an anti-denial of service, because spam is a kind of denial of service. It's an anti-DOS, tactic. Well, we ended up using that. That's how we use the Lightning Network on Decred with Bison Relay. So instead of, like most communication networks, like they always want to know, what's your phone number, what's your IMEI on your cell phone, and what's your blood type, I need a stool sample or whatever. So it's like, so they need to know way too much about you. Speaking of which, I had to give a phone number in order to get on this, Meet Google thing. And I was like, what the heck is this? I shouldn't have to give a phone number. That's garbage. But metadata aside, that is the problem is that metadata is used as a justification for all kinds of surveillance and all kinds of just spying and nonsense and manipulating people. So then how do you get away from that? And I would argue that the way you do it is a hash cache like system, where if you want to relay data, if the three of us want to relay data, if every piece of data that we both send and receive, so both on the sending and on the receiving side, we send a microtransaction as an anti-denial of service, technique, then things like microtransactions take on a whole new meaning. That is that everything you do is gated by a microtransaction. And what does that allow you to do? That allows you to avoid requesting all this other nonsense metadata, like, I don't know, a stool sample or, a phone number or, whatever, pictures of your house, with a satellite, whatever it is that, is being asked for, you don't have to give that. So that's how we use the Decred Lightning Network, is we use it as basically a way to gate communications. And I also, one of the things I like about that is it creates a utility for Decred that, is not present in almost any other cryptocurrency. Other cryptocurrencies, there's this notion of gas, but it's like, do you really need the gas? Nah, not really. You probably don't. But they sort of engineered it in so that they could, have that kind of utility token argument to make. And in this case, we've, after the fact, gone, well, this is how you make Decred into kind of a utility token. So that's that's how it all works, and that's how we try to sort of differentiate from the Bitcoin Lightning Network, which has incidentally, I don't think it was really by design, but incidentally become almost entirely custodial on the client side.
It is interesting, and I have to ask you at this point, why does Decred need the Lightning Network? Is it for privacy purposes to do swaps, or is it for scaling?
I think that, I kind of answered that, with what I had just said, but think about it like this. If we tried to do these transactions, these anti-denial of service payments for routing data, and we tried to do that on chain, there's nowhere near enough blockchain space. You send a message to 10 people, that's like, 10 transactions or even one large transaction, that goes to garbage really quick. So basically putting things on chain is really, data intensive, both from a storage and from a network perspective. So it's like, if you have too much stuff on the network, too much stuff on the disk, then your chain turns to, junk really quick. So to keep the chain lean, you need to do stuff like that off chain. So what Bison Relay was us basically figuring out, how can we do something with microtransactions that no one else is really doing, and have it be something that literally needs microtransactions. It's not just, hey, microtransactions make this nice. This technology straight up would not work without microtransactions. Like just to give you an idea, we send several thousand of these messages a day on our server. Well, it's like that's several thousand on-chain transactions we would need to be having, and then you have to wait for each of them to settle, and then it would make for a really crappy communications protocol.
Yeah, that is interesting. And I gotta ask you at this point, how would you fix Bitcoin's implementation of Lightning? Because I think yesterday I read this bit of news that the liquidity has plummeted and also the number of nodes is declining over time. There seems to be this time when people are losing faith in the Lightning Network, but at the same time, you are so optimistic about it and you seem to be very much into it. And I don't think it's in Decred's plan to remove the Lightning Network or give up on it to embrace something else. So if you were in charge, theoretically, because it's a decentralized project, but if you could make some recommendations to Lightning Labs or Blockstream or Eclair or all of these companies, what would you tell them?
Phoenix?
Well, I mean, from what conversations I was having with Dave C. and Mathis, one issue that they had was, I forget what they call it now, parent pays for child, is that right? Where we went down a different route. So that was one implementation that's kind of messed up their Lightning Network a little bit. And the other one is obviously, with our SPV, we actually had a consensus upgrade that basically put all of the SPV filters in the block header. And that basically means rather than having just a portion of the network having these filters, the whole of the network has the filters. So I can connect with any peer on the network, and they have the filters that I need to verify my transactions. Whereas on the Bitcoin network, you don't have that. You have to connect to a neutrino node or whatever, and then they have to have the filters ready for you. I mean, as I understand it, there's quite a few of them. I think last time I checked, there was about 100 nodes that were running the filters. But to have 100%, I mean, that's ideal for me. So those are the two things that. What was our I forget what so Bitcoin does child pays for parent. What was our one called?
What child pays for parent?
Oh, the actual transaction method. I wish we should have got Dave on.
Are you talking committed filters or?
No. There was a thing that came up about a year ago. One of the devs from the Lightning said he was quitting, and he gave the reason for it. And RPF or something.
RBF?
RBF, yeah.
That was Antoine Riard, the developer from Lightning, who revealed this flaw, and he said that he's quitting. And I tried to get him on the show, just for the record, and he said that he doesn't want to be a Mike Hearn, and he's looking into ways to fix the flaw that he identified.
Yeah.
And if he's able to fix it, he's going to come back.
Yeah. Well,
Say again?
Sorry.
You said something about Mike Hearn.
I haven't heard the name Mike Hearn in a minute, so that's a flashback for me.
Oh, I also tried to get Mike Hearn on the show, and I sent him an email, and he actually responded, but said he's not interested anymore. But it's funny because Mike Hearn takes a lot of blame from the Blockstream camp. He is the guy who's being portrayed as this Google employee who came to Bitcoin with a Silicon Valley mindset and broke it. And he does have a lot of merit, I think. He did build a lot of good stuff, even if ultimately he sided with the wrong people and he did not win and he ended up rage quitting. I think he still deserves a lot of recognition. He believed in Bitcoin when maybe 99.9% of the people today thought it would be a Ponzi or something.
Well, my recollection is that one of his major contributions was Bloom filters. That's my recollection, and so there's a lot of problems with Bloom filters, which is I think what I recall as being one of the core the core group arguments against Bloom filters and incorporating like Bloom filter too much Bloom filter support is basically that it is like a denial of service like hole. That is that you can hit the Bloom filters really hard and just like basically, DOS on the P2P network side, of full nodes. But it's, it's easy to rage quit. I mean, I could have rage quit. I totally could have rage quit, but that's the easy way out. It's like getting angry and I'm taking my ball and I'm going home. And so it's like, I didn't rage quit. I was like, okay, I'm very frustrated with this. How am I going to pivot so that I can, keep the ball rolling, in my case. And I think that, what was it? I forgot, what does RBF stand for? I know that's the one
Replaced
where
by
you can
fee.
Huh?
Replaced by fee.
Replaced by fee. Okay, it was that was the R. Is I'm like something by fee. Yeah, so it's the one where you can attach higher fees and then get stuck transactions mined. So,
Yeah.
I feel like it's really it's easy with technology to throw up your hands and be like, F this, I'm going home. I don't want to do it anymore. But I mean, I feel like that's what really defines, people who are really here for the technology is we tough it out. Oh, it's not working great. We'll figure out how to make it work great. And so you were talking earlier about, what advice would we give about, the Lightning Network for Bitcoin? Is I think that it's tough. So I think that, Phoenix's advice to be like, formalize committed filters. I think that one's a no-brainer. It's low-hanging fruit, but it requires consensus changes. We had to make a consensus change to add it. So we already have that. We've got committed filters. It makes it a lot easier to have SPV clients as opposed to just like, Phoenix was pointing out, rolling the dice and being like, crap, I got to find this particular node. And it's like, well, 98 or 99% of the nodes are Bitcoin Core. And then, how many of those support filters? So it's like not many. So it's, that's obviously a problem. But I think, like I was saying before, it's kind of an incidental problem. I don't think anyone was like, yo, let's make the Lightning Network custodial. It's incidental because when you start doing this in the context of bricks and mortar people want that USD. So if you want to have sort of like a closed circuit with one service, like let's say, I don't know, I'm like Johnny Wallet, I'll just say a name because I don't want to use any actual service's name. But it's like, I'm Johnny Wallet, and then you go to the customers, and the customer's like, I want it to be easy and just download the app. Boom, boom, boom. Okay, well, then you don't want to do SPV filters. So that's annoying. Okay, so that kind of hamstrings us. And then you go to the people on the receiving end at the stores, the vendors, and they're like, I just want to receive US dollars, but I want to allow the people to spend the Bitcoin. And so it's like, well, then you're kind of stuck. As the person who provides the service, you're like, oh, well, I almost have to be a fiat service provider, and it has to be custodial. So, it becomes this rabbit hole. And it's like, I think that focusing on use cases like Bison Relay, where people use the asset to spend on things that matter to them that don't involve someone on the other end going, oh yeah, but I just want fiat. That's basically, you have to get away from that. And so it's like the most brain dead approach to the problem is to go, oh yeah, I'm going to go to a bunch of vendors and then I'm going to give them fiat and then other people will send us Bitcoin and we'll exchange it. Yeah, that's a brain dead business model. But you got to get beyond. I think that, getting beyond that, it took a lot of brainstorming, on my part to come up with a way to justify using Decred as basically a utility. And I think that the Bitcoin guys can swing it, and I think that that's what they really should do, is focus on use cases where people send the Bitcoin and receive the Bitcoin natively, and then you can actually use a non-custodial wallet, and you don't have this basically use case hole where it's like everyone's like, oh, I need dollars. It's like, no, I think that the big idea with cryptocurrency is we're going to move beyond fiat currency. We're not just going to forever have fiat currency and hooray, hooray, it's great. It's like we have to move beyond that. And in order to move beyond that, we need to avoid the regulatory rat hole that is fiat.
At this point, I got to ask you something, Jake. And someone asked me in the chat if there's going to be the Bison wallet demo. Don't worry, that one's coming. I have it ready. But I got to ask you, Jake, you left Bitcoin before, a couple of years before the divorce between big blockers and SegWit people. And I gotta ask you, at the time of the block size debate, where did you side? And in hindsight, do you think that your opinion at the time was correct, or would you make the same choice?
I was not strongly in favor of one or the other. I felt like the Bitcoin Core guys did not make a very good case for Lightning Network. The way they portrayed it was like, hey, this is just what we're doing. It's either, take it or leave it, as opposed to, hey, there's a really good reason to do this, and here's why. So I felt like there was never really the marketing or sales side of it to be like, guys, I get it, you're devs, you have your opinions. But it was like they collectively made their decision and they just went for it with LN versus large blocks. I personally don't see a big problem with large blocks, but I mean, I also have kind of a nuanced view of things. I've seen a lot of things that other people haven't seen. My lived experiences deviate pretty substantially from a lot of people. Like, for example, it's like I've seen kind of how the inside of the beehive looks with Bitcoin early on, and I didn't like how it looked. So I was like, okay, it's a cool project, but like this is not what I want to do forever. And then, I also am somebody who my inference skills are incredibly strong, whether people believe it or not. And so here's one of the things that you might not know, and I'll just state it like a fact as opposed to really explaining it. The bigger you get bigger blocks, and then machines end up in data centers. So, eventually, if the blocks keep growing, you can't host the stuff from home. 32, 64, where does the block size end? At some point, it's just going to keep going and going. Okay, then everything goes into data centers. Something most people don't know about data centers is that data centers, especially the big ones, are full of intelligence service people. So if you go to a major data center in any country, there are going to be people from the government in that data center dressed up as normal plainclothes people wandering around the data center when you don't think they should be. And I've seen it. Like, I'll just give you one example. Is I used to have a co-location space in a particular facility in Chicago. I would go in there, thousands of empty racks. I was the only dude for 100 yards in every direction on the floor. Every time I went in there, there would be somebody who would show up either immediately before or immediately after I got there and work on the rack like 2 racks from me. And after a while, it's like, this is not just some random person. This is not the dude who owns this rack. This is somebody who's been assigned to show up in the data center. So anybody who thinks that running stuff in data centers is a path forward for, like a cryptocurrency network doesn't know the first thing about OPSEC and the way data centers work. So when you know things like that, then you go, okay, what do small blocks mean? Small blocks mean you can run it from home. Running it from home means there's not necessarily somebody who can just show up and flash a badge and be like, boom, I'm going in and I'm going to get into this machine. So I think that component that's something that took me a while to kind of like, sort out. I felt like I didn't appreciate that angle, in 2014. So I was like I was leaning towards larger blocks. Like, why not larger blocks? I felt like there was never a compelling argument against it other than we don't like it. Or it would get too big. And it's like, well, when you consider people compromising machines in data centers is brain dead easy, then small blocks make a lot more sense. And then the other thing to think about is that, Lightning Network does make sense. But again, there was never really a very good explanation put forward. It was just, this is what we're doing. So it's like, that was so initially I was in favor of larger blocks, but as time has passed, I see the wisdom in smaller blocks, but not from the perspective of just, hey, I trust these guys who run this project to, do the right thing. It's like, I have my own, sort of life experience, which is like, oh yeah, I can see why you don't want to have these machines in data centers.
Yeah, I think at this point, I am sort of what they would call a big blocker back in 2016, 2017, in the sense that I think I would be fine with 32 gigabyte blocks in a time when storage is affordable and we have Starlink internet anywhere around the world. And people will say, that's expensive and blah, blah. But honestly, if you're gonna run a node, I think you have much more than, say, $1,000 in Bitcoin. And if you don't want to secure that by paying for an internet fee, I'm not sure why you want to run a node in the first place. Like, you don't want to secure your own transaction. But my rationale is that we're going to have layer 2s. We're going to have Lightning Network. Maybe we're going to have rollups. Maybe we're going to have side chains. And I do want people to be able to onboard these side chains or the Lightning Network without custodians. Because right now we got to a point, especially, so I was a node runner in Bitcoin on the Lightning Network. And I did try to provide the service of being a routing node and optimizing to have as many channels with economic nodes that have a lot of volume and whatever. And I did soon realize that there was no way for me to compete. And I spent a lot of money opening channels and trying to rebalance liquidity and stuff like that. But then I realized that I wasn't routing as much as I expected. And I sort of gave up. And nowadays I use what they call the LSP, which is the Lightning Service Provider. I use Phoenix, I use Blix, I use the other one, Breeze. And it was disappointing because it felt like the network became more centralized and we gave up on the sovereignty aspect of it. And afterwards, I think around 2021, 2022, we started hearing messages such as just forget about trying to do anything by yourself with Lightning. You need professional infrastructure. You need industrial scale stuff that makes it efficient, that makes it good for everyone. And then custodians became just fine. And we saw Donald Trump yesterday paying with a custodial wallet. And that was disappointing. If you're going to get someone to make a Bitcoin transaction, at least go the way that it's supposed to be, peer-to-peer, not bank-to-peer. And yeah, at this point, you have inventions like Cashew, which is eCash on top of custodial Lightning, and provides the benefit of having some privacy on custodial Lightning, but people are throwing VC money at it, saying that it's the way to scale Bitcoin. And then you have federations with custodial Bitcoin on the Lightning Network, and that's Fediment. And it's so disappointing to go from something that was supposed to allow anyone to onboard and offboard for the sake of just opening these payment channels and settling at one point, and having this situation where people say, it's still Bitcoin, but it's custodial. We're trying to reinvent banking and find new excuses for it. And I just don't identify with this side of it, which is why I think having slightly larger blocks would be fine if more people could onboard and depeg out of these layer 2s. But I'm curious to know what you think about this situation.
Phoenix?
Yeah, I mean, I'm very much in the camp that the blockchain definitely needs to be as efficient as possible. So you get these scenarios, and I think you said 32 gigabytes. That's why I kind of frowned a little bit. 32 gigabyte blocks, like, whoa, that's going to cost a hefty amount to store that. But it is a tough one. There's a lot of compromise that are happening currently. I mean, my ultimate goal is that I want as many people to be able to run a full node as possible. And if you are not able to run a full node, then you should be able to run an SPV, which is kind of like the smaller compromise to that. And once you get into a blockchain that goes into the hundreds of gigabytes, or you're trying to process 100,000 transactions per second, this just, it's no longer feasible, really. And then you start getting into the Solana kind of area where you need, like, I think it was 500 megabytes of RAM to kind of be a validating node. So yeah, there's definitely some compromises there, and I personally like the way that Lightning works, the way that every transaction is kind of bundled into making sure it's the last transaction, so you kind of minimize these things. And then once you've run out your liquidity and it goes back on chain, maybe 8,000 transactions then just becomes one. And I see that's quite a nice way of kind of consolidating all that information. So I haven't given up on the Lightning Network. And I still think that we should try and keep the blockchain as efficient as possible. As we get to the global scale, we'd have to wait and see. And if you need bigger blocks, then that would be a decision to make. Certainly a vote in the Decred's case to increase it from 400 kilobytes to a megabyte or above. So yeah, I mean that's my take. I'm very much in the camp that says the blockchain should be efficient. As many people as humanly possible should be able to validate their own nodes, and the hardware requirements should be pretty low.
Yeah, I mean, in terms of how we're going to scale, scaling it's always trade-offs. I mean, one thing that's attractive about, say, a blockchain is that compared to the alternatives, a blockchain is pretty simple. That is, the L1 stuff is straightforward in comparison. As soon as you go to L2, the complexity goes up quite a bit. So it's obviously great to have simplicity, but then there's consequences to simplicity. So it's like, okay, simple is great, but then what are the consequences of keeping it simple as we grow? It's like, well, at a certain point, you're going to have to choose some trade-offs and be like, okay, well, hey, it would be great if everything was an on-chain transaction, but there's some instant downsides. I mean, one of them is that your transactions don't settle quickly. They don't settle quickly enough for all kinds of use cases. It's like, you're at a grocery store. Does it make sense to wait for an on-chain transaction to arrive? And then in a Bitcoin that has very little privacy like Bitcoin, does it make sense to spend on-chain in person? It's like, well, I'm sending you some fraction of my giant UTXO. And so it's like, well, now they know what, how much you got in that UTXO, and then that you own it. So it's like, there's serious problems with, every one of these approaches. And it's a question of trade-offs. It's like, and I've had moments where I say where I am critical, but I keep it real about, say other projects' privacy tech. But it's all trade-offs. Like, for example, I think, Monero has the strongest default privacy, of any blockchain. But then there's trade-offs. One is like, if you have a quantum computer, there's a stealth inflation risk. There's you can't ever really throw out your old transactions. And the reason is that, you need to keep them forever because you can't tell which ones are spent. And so there's all of these trade-offs involved with technology in the blockchain space. And I think that it's easy to get really over-focused on one or the other. And so I try to, take the approach that's like, hey, I might prefer one approach to another, but that doesn't mean the other approach is wrong. It's just a question of going, okay, how do we navigate this? And then one of the special challenges that Bitcoin has is that Bitcoin's governance mechanism is supposed to, according to the white paper, be proof of work. But proof of work is basically compromised to the point where people were like, we'd rather riot on the blockchain than let proof of work, make the decisions. So it's like, Bitcoin is stuck in a difficult position where it's like, there are these changes. There are these big political changes that, need to be made. And these decisions need to be made eventually. But it's like, the way they end up getting made is it's like, well, then, the central planners make the decision. And then the only way the decision gets ratified on the chain is like effectively people rioting, which is like, well, that's a crazy governance system. So it's like, how you're going to solve these problems comes down to a whole bunch of decisions, and you're not always going to make the right decision. I mean, like, hey, I've made some bad decisions myself. I mean, I think that me screwing with the, me arguing with Taco Time about the what is it, proof of work, proof of stake split, I will live to regret that one. So, but it's all about, trying to adapt and overcome over time. It's like, that's the best you can do. And I feel like Bitcoin really has a very tough road to travel in that regard because of the way, proof of work is shaken out.
Yeah, I actually got an interesting comment in the chat, and I think it's useful to address it. So Based says, Vlad, it's incomplete to talk about a governance coin without asking about holdings disclosure from the creator. And as far as I know, Jake, you're not a creator, right?
Huh?
You are the creator, or you?
I'm one of the three founders. It was myself, Taco Time, and Ingsoc.
Yeah, I know about Ingsoc and Taco Time, but okay, it's not fair to call you creator, right, per se.
I don't think I'm not I am a founder. I'm not the founder.
Okay.
Well, so you may or may not have noticed there were some we have some detractors here. So I'll just I'm gonna condition my response with what I know to be history and people may avoid. There are people who are very upset with me for one reason or another, and this is a common tack that is taken. That is that, oh, your project is junk because you need to tell us how many coins you have. And so, my take is this: when we launched the terms, we had a small pre-mine. The terms of the pre-mine were made abundantly clear at the time. Some of those coins have been spent, some of them haven't been. And this idea that I have to divulge what my holdings are to the public in order to justify basically a technological system is clownish at best. And I would say just like tricky, it was like super malicious at worst. Because it's like, listen, I know things like, hey, how much Ethereum does the Ethereum Foundation hold? I'm not going to press that. I mean, that was just straight up publicly known part of the pre-mine. But I'm not going to demand information about that in order to make my own judgment about their governance system. So, I mean, my position is this. Yeah, I have some decred. Yeah, it was transparent early on. And that's, and that's as much as I can really say about it. And the reason is that, it's like asking somebody how much money you got in your bank account. Nobody's going to tell you that. So it's like this idea that like I have to tell people what my my balance sheet looks like in order to justify technology that I have is ridiculous. So that's my position. But yeah, I have some decred because I founded the project with a couple other people. And so that's where I'm at with it. And some people, that the reason they ask this question is no answer I give will be enough, right? Even if I said what my holdings are, it's not enough. Oh, then there's a problem with it. Or, oh, how do you know he's lying or not? So this is what I mean is like, it's a tricky question. And if you look through the comments I was arguing with somebody in the comments of one of your posts recently, and they brought up the same topic. So I have a feeling I know who that is.
Yeah, I think you're arguing in the comments at one point also with Fluffy Pony. And
that was part of that. So there are one thing that, I mean, I feel like almost every cryptocurrency project has seen this. Maybe we've seen more of it. It's hard to know. I don't talk to a lot of other project leads or like senior project people for other projects. But we've had a pattern where there's been a handful of very persistent provocateurs that operated within our project and tried to worm their way in, gain influence, and then if we oppose them, and in one case I did oppose one of these people because that was my perception. My perception is they were worming their way in to do malicious stuff. Then they get the smackdown, and now it's like a perma sock party that's coming for me to be like, oh well, Jake's a bad guy and the project sucks because of Jake, blah 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 blah. And so it's like we have a handful of people like this, and that was who I was arguing with, and I believe the intent of the argument was to potentially rope in someone like Fluffy Pony, who it's like, listen, I don't want to argue with Ricardo. I just want to I'm generically supportive of Monero. I'm not here to argue with the guy, but somebody is very keen on roping me into arguing with him. So that's the context that I feel like a lot of people are missing.
Oh, that's funny. But at the same time, this is the power of open source software, right? Everyone can run their own client, build their own software stack, and in the end, you let the free market decide which one is better. And
exactly.
I think the time is right to do that Bison wallet demo. I do know that a bunch of guys have waited for this. We've had 500 almost, watchers and listeners across multiple platforms. So I gotta thank you guys for the comments and for engaging with the content and being patient for this demo. And since you're so patient, I'm gonna present to you the last ad for this episode, which is for hodling.ch. They're this service from Switzerland that's gonna help you with consultancy on self-custody. If you're from a company that's trying to buy Bitcoin or Decred or anything else, and you have no idea how to manage that, how to set up a quorum, how to do a multi-sig, how to use hardware wallets, and who's gonna hold them, then you reach out to these guys. You benefit from the secrecy of dealing with a Swiss company, and they're gonna tell you exactly what you need and for what use case and how you should back it up and everything else in between. They also have a key recovery service, so in case you forgot maybe 2 or 3 of your words from the seed phrase, or you have them scrambled and you're not able to figure out which is which, they can try to brute force basically to recover your wallet. So check out hodling.ch. They provide the service, and thanks to all the sponsors for supporting the show. Also, I gotta show the Pepe that my girlfriend has drawn for you. I'm gonna put it on the screen. I think it's very funny. Sorry, Phoenix. Right now I'm covering your head, fine. But I'm gonna move it down.
I was definitely amused.
Just a heads up, lad. I've got to go in about 10 minutes.
It's fine. So I'm gonna put this on the screen, and now I'm gonna share the screen here in the call and show Bison Wallet, which I think is very interesting. I took the time to look at it today. I did a quick installation. Unfortunately, I will not be able to show you. Okay, so this is the interface for Bison Wallet. I will not be able to show you what it's like to install it the first time. But as you can see, I'm in. This is the interface. I'm not sure if you can see the mouse cursor. Yes, you can. And I also need to remove this Pepe because it stands in the way. I'm gonna move it here. So what you have here is the interface. For people listening on Spotify, this is gonna be a bit more challenging, but I'm gonna try to describe everything that I'm seeing. I set up a Decred wallet here. So I have send, receive, wallet type, year count, block sync. It's syncing right now. It's at 14% almost. And you have basically all the functionality of an exchange, with the currencies that are available being Decred, Bitcoin, Litecoin, Dogecoin, Dash, Digibyte, Ethereum, Zcash, Firo or Firo. I'm not sure how you pronounce this one. Bitcoin Cash, Polygon, USDC on Ethereum, Tether on Ethereum, USDC on, I'm not sure what this is,
Polygon.
Wrapped Ether on Polygon, Wrapped Bitcoin on Polygon, and Tether on Polygon. So you have these options. As you said on your website, you're not gatekeeping the assets that can be available. So if someone else wants to fork it and add something else and run their own server, they are free to do so. And at the top, you have the options for seeing your wallet, for going to the trade interface, and you have to pick a server. And we'll go into view only mode, and we can see the sells and the buys for various pairs around here. You have BTC, USDT, DCR, BTC, DCR to Matic. I think Matic is Polygon. DCR to USDT on Polygon, LTC USDT on Polygon, and USDC to USDT. Basically, and this is very interesting, you can swap your BTC for Tether without an exchange, without a trusted third party, just peer-to-peer with another user who uses Bison Wallet, and without KYC. I think this is a pretty big deal. And there's also a robot here at the top, which is for market making, and you can set up a bot according to the prices from exchanges that you pick yourself. We'll just leave the default, which is Binance and Binance US. And you can create a bot. There are no markets available, you have to register. But it's interesting that you can set up trading bots, and you have some notifications here. And in the settings, you have multiple languages, order history, and for settings, you can set up sources for fiat prices, dexes, and this is the URL for connecting to a dex. You can add another server, import account, change your password, view application seed, and redeem game code. I don't know what this is.
They were running some games, so they were hiding in various places around the world. I think it was Michigan, is that right? And they hid a capsule, so you could actually reclaim 10 DCR. We're hoping to do a few more of them actually. So places around the world to actually hide some DCR, and you can reclaim it on Bison Wallet.
Okay, so if you were to describe what this is, how would you describe Bison Wallet? What is the purpose of this?
In terms of the wallet section itself, so what you're looking at now, the Decred wallet, that's an SPV wallet. So it's a native one-click wallet, and everything comes as like a card. So the top card is your basic wallet balances. It's your send and receive button, so you can send from other wallets and so on. The next card down is your card for how much the fees are going to be on that particular blockchain. So remember, everything that happens on Bison Wallet is an on-chain transaction. So the only fees you're going to pay are those fees for actually moving from one wallet to another. So that's what that second card is. Now, the idea of Bison Wallet is we're going to open up the advanced features of every single coin out there or that's listed. So for instance, Decred has voting, it has governance, it has staking, it has privacy. So the next card down, you've got the staking element. So if you was to click on the item that says select a voting service provider, and you had enough to stake your coins, you could choose one of them, and then you could do some staking. And it tells you how many staking providers are and who's got what percentage of tickets. So the next one, the one you're hovering over now, tells you the consensus votes, tells you other governance features, whether there's treasury spends, and you can actually set your preference here. So you can abstain from governance spending, or you can say yes, or you can say no, and the same goes for consensus changes. And then down the bottom, if you close that window now, so that's pretty much that at the moment, but down the bottom, we have one-click privacy. So for instance, if you had Decred in your account now, say you had 20 Decred, you turn that on, and then your available balance would move to your unmixed area there at the top. And then as the mixing happens, it will then move back into the available balance until all of that is mixed. One area that we see this could be quite useful in, so say for instance, you do hold Bitcoin and you want to kind of mix them and kind of make it all private, you could send some Bitcoin, transfer it into Decred, do the mix on Decred, which costs you about less than a penny, it's like a fraction of a penny, and then move the coins back to Bitcoin. So it's a nice way of actually mixing your coins between two and actually having that extra privacy. Another feature that there is, and I can't remember where this is, but you can actually select new addresses for every single transaction as well, which is pretty cool. So if you've mixed your Decred and you want to send it to a Bitcoin account or whatever, you can actually change the address. So you're actually sending it to a brand new address. So that's kind of helping with that privacy as well.
Oh, this is interesting. And I do read here that there's a mention of CoinShuffle++. Can you explain what this is?
Well, CoinShuffle++, we've got this staking system. So at the moment, the staking system's got about 10 million coins out of the 16 million Decred available. It's got about 10 million coins. And it utilizes that constant flow of coins to actually, I forget what, make, what's the word I'm looking for, Jake? I can't even say it.
Anonymity set?
There you go. To make it, sorry, my words are completely gone tonight. So you use all these coins that are constantly flowing in and out of the stake pool. Like saying it, and the stake pool has to maintain 41,000 tickets. So that's where all these coins are coming from. And then combining that with people that want to have privacy and mix their coins is what gives us these huge anonymity sets. I said it, yes. And that's kind of how it works. Jake can probably explain it a lot better.
Well, yeah, I'll just give you the quick summary. CoinShuffle++ is basically the basis of our mixing technology. What we did is that CoinShuffle++ is the sort of the unmodified Bitcoin way to mix to mix coins. Now, somebody has to run a coordinator using the sort of the process proposed in the original paper for CoinShuffle++, but it doesn't make use of confidential transactions or any of that. And we ended up adapting it to Decred. Our initial implementation was such that all the change is mixed down through CoinShuffle++, and then all of the mixed stuff that you can combine those, and then things get mixed as they're used. So the process of CoinShuffle++ is actually integrated into our staking. So you can turn on privacy, you can turn on mixing and turn on staking, and then it will mix while it stakes. So your stake is mixed. And then what we did is we added further, a couple further modifications to it. We made it post-quantum secure. So what we did is that there's a part where you generate session keys, and you do that using normally elliptic curve PKI. Well, we made it so it uses post-quantum PKI, and it generates session keys by adding one more phase to the process. So we basically modified CoinShuffle++ to make it post-quantum secure. And then what we've recently done is we got rid of the centralized coordinator. So now it's a peer-to-peer process. So there's no single server that's used as a coordinator. Now notice that a coordinator was not custodial at any point. So it was never anything like, say, Samurai Wallet, where it was it was choosing addresses or handling people's extended public keys. the way it works is basically the client does what it does. It sends messages, and then the the coordinator, at least when we used to have one, would merely relay that to the other clients. So we don't do that anymore. Now it's all peer to peer. And we have some more modifications in the pipeline, but that's how we use CoinShuffle plus plus, and we've been using it since, I think, is it like late 2018? I think it's been a minute, or was it late, or is it like summer 2019? I can't remember.
Okay, so now that we're in this interface, I'm gonna go to Bitcoin and create a new wallet, and I have these settings about fallback fee rate, highest acceptable fee rate. This is interesting. Redeem
So you've got
confirmation target. So let's say that I want, after one confirmation, to have my funds available. I can set the wallet name if I want to connect to...
Vlad, sorry, mate. Can you hear me? Vlad, you've actually got 3 wallets there, 3 wallet types. So the first one, at the tab at the top where it says native, that's the native wallet. That's the SPV wallet. Then the one that says external, that's a full node wallet. So if you're the first external. So if you're running a Bitcoin node already, you can actually connect your wallet, your Bitcoin wallet, to this, just using the RPC request. And then the final one is an Electrum Light Client wallet. So there's 3 different wallets there that you can do. So if you just want to do it really, really simply, you just click on native, and that will set you up an SPV wallet in one click. So just press create, and it's done. And there you go. Now that will sync. So because it's SVV, that'll probably take about 10 minutes to sync, and it'll also try and find up to 8 peers.
Interesting. So it works a bit like Electrum.
Yeah, but this is using the Neutrino SPV.
Oh, so it's downloading the block filters, I understand.
Yeah.
Well, that was a nice jump to 8.8%.
Yeah, I have pretty fast internet, but given that I'm live streaming, I think it's gonna take a bit longer than normal. So we're gonna wait for 100%, and we can see on the right side that I have the markets. You have this DCR to BTC pair and BTC to USDT on Polygon.
And I think it's worth mentioning that the ability to permissionlessly swap between BTC and USDT is a potentially very useful thing for just Bitcoiners. That is, you use like some trivial amount of Decred. It's not like you need to buy a large amount by any means. A very small amount so you can do your Fidelity bond, and then you can swap. But like, let's say you feel like the BTC price is low and it's bottoming out. Well, you can buy more, you can get more then, and then you can also, swap out when you feel like the price is high. So you can effectively, trade with, in a USD pair. Now, the only thing I would say to point out is you have to remember, Tether and these stable coins are not permissionless. So in an edge case, if you're doing something sketchy, you could potentially run into problems with stable coins. So just keep that in mind, especially if you ever try to redeem the stable coins yourself.
Is there any network level privacy for this wallet? Can you connect via Tor or NIM or something else?
Yeah, I believe there is. I believe there is a Tor setting in there, or maybe no, that was Bison wallet actually. No, Bison relay. Sorry, I'm not sure. That'll be a question for Buck actually. I'm going to apologize, Vlad, but I've got to go. I've got to bounce. It's getting quite late here, and I've got to make sure the kids are in bed and all the rest of it. But it's been an absolutely great show. I really appreciate you seeing us, and if you want some Decred to get started and doing some trades, just send us over your receive address, and I'll make sure that happens tomorrow.
Well, it was on the screen for a few moments, so you can just rewind the video, watch this, and send to that one. I did generate a bunch of them. We're almost 100%. I gotta thank you, Phoenix, for being here and for being so patient and going through all this process with us. And Jake, can you say a bit more just to demonstrate this and explain some technical stuff?
Sure thing. As long as my kids give us the peace and quiet we need, we will make it happening.
Cheers, guys. Take care.
Take it easy, Phoenix.
Okay. So we're waiting for this to sync. It's gonna be no, it's already 100%, and it needs to reach, you said, 8 peers.
I don't know if it needs to reach all 8 peers. I mean, remember, anytime you have a Bitcoin node, hey, having more peers is good, but you don't need 8 or 10 or whatever many peers. I mean, it's just a question of, it's good to have 8 peers. I believe that's the target number that they typically that full nodes aim for. It's been a minute since I've followed this stuff on Bitcoin, though.
It's very interesting. You have these suggestions about the fees, and once again, you have your transaction history, Bitcoin activity. I guess this means whatever swaps you did, right?
Yeah, so if you do swaps, the recent activity would be there, or you would also have incoming and outgoing transactions to the wallet. I mean, something to keep in mind is that I am a very strange person. A lot of people like GUIs and to click on things. I'm like all about the command line. So this is the first time I've seen a lot of this up close. But my understanding is that this was an enormous amount of work from Brian Stafford and some of our other devs. So he is the lead on Bison Wallet and DCR Dex. So he's responsible for a lot of what you see here.
Yeah, and I do see that in the receive side of BTC, you deposit to an address which is native taproot. It's BC1Q.
Mm-hmm.
So you have basically the latest version of the wallet that you can use.
Yep.
And I'm gonna try to also create, let's say, does Litecoin support Mimblewimble extension block?
Not sure. My understanding of this is that in most of these cases with these wallets, like Litecoin Core, there's native. I think native in a lot of these cases it's like an LTC wallet, which is actually a fork of BTC wallet, which is BTC Suite. I could be wrong because my understanding is that the way that a lot of these things work is they do work with filters. So by using the the filters for SPV, then you can sync these wallets way quicker than you would be able to otherwise if you were syncing a full node.
Yeah, this is very fascinating. You look at it, you can use this as your multi-coin wallet for various reasons. It's good for self-custody, it's good for swaps, it's good for trading. It has lots of interesting use cases. And you also have Zcash, but I was wondering how come there's no Monero?
Okay, so the explanation for Monero is that a lot of us in the Decred project are generically supportive of Monero. We're not particularly tribal people. I mean, everybody thinks that their project is the best. So I try to temper that, and the reason we don't support Monero is that the way that our atomic swap process works assumes that that both assets in the swap support what the hell is it called, TX script, right? The scripting system that Bitcoin uses, and Monero does not use that scripting system. So that leads to a lot of gotchas when it comes to the swapping process. Even internally, I believe that Monero developed some of their own internal swap tools. They had to engineer them a particular way to accommodate the fact that they do not support TX script. That is, that they have like a more reductive, simpler version of TX script inside, that runs inside transactions. And as a function of that, like for example, there are these hidden details with how the DEX works. And so one of these hidden details is, I want to say it's to minimize settlement time. It's been a minute, and so my familiarity is nowhere as high as say my the lead developer on on this project is. My recollection is that there's a particular order, like when a taker order gets matched with a maker. I want to say the taker is the one who has to make the first transaction. And then that leads to incompatibilities with Monero, because Monero swaps have to occur in a very particular way to accommodate their different scripting system. And so there's basically there are plans to add Monero support, but it's very much a non-trivial addition compared to these other coins that you see here that are all sort of variants on the Bitcoin TX script.
Yeah, I do like the interface. It's very simple. It has lots of features. I don't see any reason why someone should not use this for Litecoin or Bitcoin, or I think also Dogecoin here. I see in the case of Zcash that when you go to create, you can only connect to an existing one, or you need the server.
I think so. So my inference there would be, remember how we saw the native ones? The native ones, and this is again a recollection of mine. It's like I'm not, we have a lot of different things we do, in the project. So I don't follow this incredibly closely. But my inference is that there's no SPV wallet variant for Zcash that we can pull in easily. So what we have support for a full node here, but we don't have support for, there's no like ZEC wallet like there is for BTC wallet and LTC wallet and, these other variants. I think that, it might be interesting to look at Dash too, because I think that I would expect Dash to have a similar thing.
Yeah,
Yep.
it does.
Yeah, so there it is. So basically the assets that don't have an SPV wallet, the only option is to really connect to a full node.
How does it work for Tether? You just create an Ethereum wallet?
I believe so. So because stablecoins ride on top of whatever it is, smart contract projects, I believe that's part of it. That is that because it's the stablecoin on whatever chain it is, that basically it's a wallet for that chain. And my recollection is that the way Ethereum works is that I think we do everything through what is that centralized service that they use?
Infura?
Yeah, I think it might be all through Infura. But again, I'm not normally one to say I don't know the details, because normally I do know all the details. So, in this case, I don't know all the details. There's a lot that went into Bison Wallet. It took quite a bit of time to have this pop out.
Yeah, I can see that, but it's so cool. I think people who use MetaMask or something else, what's the other popular one for multiple coin? Exodus. I think they should definitely switch.
Well, I think the upside of Bison Wallet is, just like a lot of the other features that we have with Decred, is it's really all about sovereignty, which is that it's easy to use centralized exchanges, and then you use this centralized exchange, and then it's like something bad happens, and then boom, your coins they're gone, or not your keys, not your coins, under strange edge cases or strange scenarios. And like it might be the country that you're from is suddenly country non grata for whatever the exchange is, and then boom, now you can't get your coins. I heard that happen for like Palestinians and stuff like that, and it's like that is not how people built the cryptocurrency space out. They didn't build it to be like, oh, it's like a complex rug pull, and if it wasn't built for rug pulls. It was built for sovereignty, and I feel like this restores a lot of that missing sovereignty by not having a middleman coin, and then just just doing the right thing here. Even though we could try to rent seek, but like we just don't care about that. We're doing I feel like this is a project of principle, specifically Bison Wallet, but more generically that's how we operate with Decred.
Not a big fan of Ethereum, but I do know that they have this account system where you can't really generate a different address, but I was wondering if you can create a different Ethereum account, because I see you have the single address.
I would guess not. That would be my guess, is that my recollection of how Ethereum works is that it really does all boil down to like you have one address and that's it. So it's like, it's not ideal, but that's the game. It's not built for privacy. It's especially not built for privacy.
In hardware wallets like Trezor or Bitbox, I know that you can generate a new Ethereum account from the same seed phrase, but I don't know. So basically with the same seed phrase, you're able to unlock all of these coins, all of these accounts?
Correct. That is the seed phrase is used to basically the seed phrase is is reused for each of these things, and I think there's like it wouldn't surprise me if there's the seed phrase and then probably something like a coin type rolled into it, and then so it generates slightly different seeds for each one. But again, I'm not this is one of those areas where I'm not super familiar, and I do everything through a command line, so I'm like, whoa, this looks great, because I don't really ever see the graphical side of things.
Yeah, it's so interesting. What would be the best way to back up this wallet? So let's say that you conduct most of your activity through it, through Bison, and
I
you,
would
you want to back it up very well. What's the best way to do it?
The best way to back up any wallet is to save the seed. But when you create any wallet, any cryptocurrency wallet, you need to create the seed. You need to write the seed down on a piece of paper, and then store that somewhere secure. Don't take a photo of it with a phone. Don't put it on your phone. If you're a computer security person, you can save it securely on your computer, but I think that most people don't. Basically, I would say this: if you're not very familiar with operational security in the context of computers, you should not be storing seeds on a device. So you should be basically writing it down on a piece of paper. It takes 5 minutes, and then double check it that you got it right. So you write it down, you check it against what's there, make sure you got it right, and then you put that somewhere secure. And then if you want to go further and be more extreme with it, you can do things like, there's all those like cipher things where you imprint it on steel or whatever, and then you can also use a hardware wallet in some cases to store these things. But I personally am not a huge fan of hardware wallets because I feel like so many of them are set up to just facilitate surveillance. Like, oh, your assets are secure, but like, okay, well now company X knows everything you own.
Yeah, I think Ledger at one point made some claims about the amount of Bitcoin
Oh yeah.
that they own. And it's a huge honeypot. And then they came up with that service which puts them in charge of your keys as a backup. Like,
Not your keys, not your coins.
crazy. I would not use Ledger ever.
For me, I try to be kind of neutral with these things because everybody wants to use a different thing. Like, some people like Ledger, some people like Trezor, some people like, I think, is it Keystone? Some people like, Cold Card. There are all these things out there, and I feel like for most people, if you don't have relatively, I would say decent OPSEC with computers, hardware wallets are a big win for you, apart from the privacy angle.
Now, would you say that your experience with Decred has made you understand Bitcoin differently? And if you started, let's say you could turn back time and go back to 2012 when you first discovered Bitcoin, would you approach something differently to have a different outcome today?
Probably wouldn't. I mean, I'm who I am. I don't really, when I see things I don't like, I engineer around them. And so that behavior, you send me back in time, I'm gonna do this. I'm gonna do the same thing again. For the most part, I probably would do it a little quicker. I'd be like, oh, I know what's gonna happen 10 years in the future. Let me go back in time and tweak things a little bit to exploit that. And for example, I would probably turn down the how much proof of work subsidy there was in Decred, and a few other things that ended up going down. So it's like there's things I definitely change, but like in terms of how I interacted with Bitcoin, I probably wouldn't change. I wouldn't change much of it. I did what I did. I saw what I saw. I reacted how I reacted, and it's like going back. If I knew all that stuff and I went back, I'd be like, oh, I see how this is going to go. I'm going to pivot even sooner.
I very much understand this and I sympathize with it because it's so easy when you follow the development or lack thereof. You get frustrated with the politics behind Bitcoin, especially. And maybe that it's a feature that it's hard to change, but at the same time, when you've had something for multiple years and it's been proven by the market and there's demand for it and it's bulletproof, what's your excuse other than let's keep the software stack simple?
Yeah, I mean, I see a lot of the justifications. The other thing is that I think there's a psychology to open source that I feel like most people don't understand. My background is I'm an open source guy. I was big into OpenBSD. CipherTight, the secure backup thing I did, was open source. I've been running open source software since like '02, not pretty much nonstop. And I'm a sysadmin. I run a bunch of my own machines, so I know how it is, which is that in open source, in a lot of cases, normally there's no money involved. People do it for the pride and for the ego. That is, that they want to do it because they think they're doing it right and they can do it better, and they care about something, whatever kind of tool it is that they maintain or they code. And so I totally understand why, back in the day, hey, Bitcoin Core developers were not very keen on me showing up because I showed up, I had some money, and they were just dudes working on this stuff, and pretty much nobody was getting paid when I showed up. And so I had a team of paid people, and it's like, I get it. That does not settle well with people, especially when it, just like I pointed out, it's really all about like this like ego and like, I'm doing this on principle. And then so if somebody shows up to compete with you, some people in the open source community get incredibly hostile under certain circumstances. And I've seen it in other contexts besides Bitcoin Core. So I understand, everybody walks their own path, and people's egos are going to do what they're going to do.
I do have to ask you though, because so many projects have come and they disappeared or they faded into obscurity. And for some reason, Decred has been very resilient. Maybe it wasn't one of the top 10, but at the same time, it was around and there was always development happening and there seemed to be a community around it. So what's your secret? Because nobody talks about Peercoin anymore today. They don't talk about Vertcoin, or most, like 90-something% of the ICO projects of 2017 are now dead. And also all of these NFT projects and meme coins and everything is just a boom and bust cycle. But Decred has been pretty much a constant over the years. And what's your secret for this?
Well, I think it actually connects back to what I was just speaking about, which is that my background is open source software. That is, I run and use and build open source software, both as a matter of choice and then also as a matter of principle. Like, I do a lot of the things I do on principle. I'm not here to pump and dump. I could have pump and dumped a long time ago and made quite a pile of money and just moved on and made some garbage tokens and, continued pumping and dumping my way through the space. Now, there's a lot of people who did that and they made a lot of money, and I could have done that, but I didn't. And, to me, the principle of, creating sovereign money and improving money, making money better makes human society better. I think a lot of the problems we have societally are a function of money being corrupt, and then corrupt money corrupting people. And so if you can have money that's actually better, guess what? Human society is going to improve. And I think that, things like that are what keep me and then the developers I work with, and other community members, that's what keeps us together. Hey, we don't have an army of people, spamming on Twitter, and, we don't have an XRP army. We don't have we don't have Dogcoin 57.0, and where we're going to dump all the dog tokens and drive off in a Lambo. It's like, we're here to make better money, and making better money is something that is necessarily, it's timeless. Creating sovereign money and improving human society is something that is, it's just going, it's a timeless pursuit, as opposed to, hey, I want to make as much money as I can in the shortest amount of time as I can, and then dump it and get the hell out of here. And I feel like this also feeds into what I would describe as the Silicon Valley and Wall Street mindset, which is that both of those places are built on a business model where basically you hype toxic sludge, and then you dump the toxic sludge on retail, and you profit as a function of that. So basically you build up a garbage company that's built on flim flam and hype and nonsense, and then you exit, and then you do it again, and you do it again. And there's like a whole cult around this process in Silicon Valley and, in New York. And I think it's incredibly unhealthy. I think it's bad. I think it's bad for the United States. I think it's bad for the world. But that's the way the world turns. And I feel like a lot of that stuff came into cryptocurrency shortly after I showed up. So I showed up and I'm like, I like to build stuff. I want to build stuff and make things better. And I feel like a lot of other people are just, particularly when it comes to these pump and dumps and things that don't really stand the test of time, they're just here for the money. And, I was here for the open source. I was here for sovereign money. I was here because I've had problems with banks. I've seen what happens when people turn off your bank account. It gets really real, really quick. And the idea that it's just entries in the database becomes very concrete to you in a way that it doesn't when you don't have those problems. So I've seen the edge cases, and I've lived the open source life for a decade or two before I started doing this. So I feel like most people in the space do not roll like this. That is, most people in the space the first open source software they ever worked with was cryptocurrency, and they're here to pump and dump on you. And I'm not like that. And the people I work with aren't like that.
That sounds very nice, and I'm happy that you're around, because the stuff that you built, I think the best way to demonstrate that open source software is useful is when it gets maintained past your involvement, right? And there was that client that you built of Bitcoin that's still being used for various purposes. It was in Golang, if I'm not mistaken.
That's right.
And it's still being used by other developers. And that's the ultimate testament that you have built something useful. When other people pick it up even after you're no longer interested and you move on.
I've got a fun little side note is that remember how you were talking about, what is it? I think it's was it the Starkware guys? I can't remember, but there was I'm trying to remember the name of the repo off the top of my head. I'm spacing, but there was the basically compact sync proof, and then how that relates to Lightning Network. And sure enough, I looked at the repo and I was like, oh, okay, let me scroll down. And then on the README on the front, and they're like, oh, and we'd like to thank, the BTC Suite code base for being so clear and well written, and like all the comments. And I'm thinking like, oh yeah, that's my guy Dave Collins, who put all these comments in there. And then people can come by years later and be like, wow, this code's really easy to read and really useful. So it's great to see things like that happen. And also, I mean, to of course have Lightning Labs pick up the code and run with it. It makes me glad. And it isn't just the perception of value. I feel like it's the reality of value when things like that happen, whether it's monetary or not.
Do you ever feel like your work is a bit ahead of time, in the sense that you have this vision of what needs to get built, but the market does not pick up with it?
Oh yeah, I forget. I'm gonna botch this. There's like a one-liner for this that says, if you're like a few years ahead of the curve, people think you're a genius. But if you're like 10 years ahead of the curve, people think you're insane. And I felt like that for a long time. That is that with the hybrid proof of work, proof of stake consensus algorithm we had, that alone was incredibly forward thinking. And I think that pieces like that, it's like somebody clearly saw, and presumably they were involved with my co-founders. Somebody saw that, hey, proof of work is not going where we want it to go. So we have to basically bring in another consensus algorithm to kind of like, almost think of it in terms of like an alloy. Like you have a metal, and one metal is, oh, iron's great, but iron isn't very strong. So how do we make it stronger? Well, if we alloy it with other metals, then we can create, like superior, better metallurgical outputs. So somebody came along, saw that, and then I was like, oh my God, this is like the steel of the blockchain space. And, it's like sort of like iron before that. And it's like, I see that, but I feel like not a lot of other people see that. So it's a bit, I think it would be subtle to say it's frustrating, to be in this role, to be like, I see where things are going. I feel like I've built a lot of these things, and then people are like, yeah, that's okay, but the price action sucks.
I sympathize with that, because I've spoken to a lot of people, including Zuko. I had a chat with him once. It was private in the sense that he did not want to do an interview. It was more like a talk. And he told me that he always felt like there should be a redemption for when you're right, because he was ahead of the time with zero-knowledge proofs. He saw potential in them. Now there's an entire industry of people trying to build stuff using ZK proofs. And he feels like not only that he doesn't get much recognition, but Zcash is not really growing the way that he expected it to. And he wasn't sure exactly why this is happening, and why, for example, Monero is more popular. But I think Monero was much better with creating a community around it. And I think it's also different when you start as a community and you have this conflict, which is part of basically the first contract that you have, because the community forked off when it was still Bitcoin, and they decided to get rid of a pre-mine. That was the story of Monero. Whereas in the case of Zcash, you had the smartest and the brightest cryptographers getting together and creating this ceremony setup and raising a bunch of millions of dollars from VCs and trying to set up a foundation and stuff like that. So it's a very different origin story, and I think that also leaks into the type of community that you're going to attract. The first one is gonna attract the sovereign individual type who is very much into owning guns and trying to build bunkers under their house. And the second one is gonna attract the kind of people who are just into very cool avant-garde tech.
I think that, like Zcash had, one of the issues that I think Zcash had is that Zcash would have taken off in a different way if they had made everything ZKP'd by default. That is, everything was private. But they didn't want to do that because of the VC involvement, and then the issue that they knew in advance they would have getting listings at centralized exchanges. So as soon as you're all private by default, it becomes a lot messier to get listings at places like Coinbase. And I had spoken with, is it Ian Myers or Ian Mears? I had spoken with him in, I believe it was it 2016? Yeah, I think I spoke with him in 2016. And then he had pointed out that, hey, we're making the transparent side for compliance reasons, basically, to get listings. And I think that was their culture would have been a lot different if they had been private by default. And then I think, another one is that anytime you have a team of superstars, it can make the team top heavy to be like, well, how do we pay everybody? It's like we got like top end cryptographers from the US and from Israel. And then you're like, well, how do we pay everybody? It's like it's expensive, and keeping that tech up on the up, and then getting developers to code what's in those papers is like, it's expensive. So, I can totally, those were two things that I saw as, sort of like that held back Zcash.
Yeah, but it's still honestly the most advanced in terms of cryptography and privacy. I think Monero right now is trying to implement something from Zcash as a way to increase their anonymity set, which right now has, I think, 17 or something decoys in a transaction. And
I think it was, 16 or 17, right?
They're trying to make the entire chain act as a decoy, basically to have all the participants as participants in this mixing situation. All the nodes.
Yeah, I think it was it like FCMP plus. I had seen it, but I haven't spent much time reading up about it. It seems interesting, but it's like, for me, it's like, as advanced as everything is with Zcash, one of my major reservations is and with these generic ZKPs is who's going to audit the code. And then the same thing, the same issue with both Monero and with Zcash is that once you have something that's shielded and you can't see, you basically can't transparently audit the supply. How are you ever going to detect stealth inflation if it occurs? So those are two major challenges with those technologies. And at least with Monero, I would say you could get people who are probably like, okay, you're an advanced undergraduate, you have some grip of math. You don't necessarily need like a master's or a PhD level understanding of the mathematics to audit to audit the code. But if you're going to be auditing the ZKP code for, say, ZK rollups or whatever it is, Zcash, it's basically like you have to be master's level mathematics minimum to effectively audit that code. And it's like, because they compile all of these arithmetic circuits. It's like, how are you going to find a bug in that? Like that is heavy duty. So even though the theory is all there and it's very fascinating, and there are some use cases for ZKPs that you literally can't substitute anything else in there that'll do the same thing. But then it's also like, oh, there's self-inflation risk, and then you can never really prune the chain, and so there's definite trade-offs. And so it's like, I'm a fan of it. I think it's cool, but for me, I'm always very hesitant when it comes to complexity. Like anytime, if the code is going to be super complex and hard to audit, that gives me a lot of pause, personally. I know not everybody rolls like that.
So would you describe Decred as a privacy project?
I would, but it's different, right? You look at Zcash and you look at Monero and you look at Firo, and these projects are literally, privacy is the feature of these projects. In our case, privacy is a feature, even though privacy is obviously super important, and we're still improving it as we move forward. It is not the feature, so it's a feature. I love privacy. I feel like most people don't care about privacy like I do. Most people, won't ever get a shielded room, right? Things like that. People just don't care about a lot of things, and I really care about this stuff. But what do I care about more than privacy? I care about making sure there's no stealth inflation. Stealth inflation is one of these things where it could obviously be very bad for something like Monero or Zcash, but if stealth inflation occurred with Decred, it would literally destroy the project, because then it would destroy the proof of stake system. Basically, if you can stealth inflate, it's like, well, how do you know who's in charge now? You don't even know if there's how many coins there are in circulation. There's suddenly stealth inflation, and then the staking gets completely taken over by somebody who's stealth inflated, right? So it's like that. There's extra aspects to consider with our consensus system in the context of stealth inflation risk.
I'm looking at a blockchain explorer for Decred right now. It's dcrdata.decred.org. And I see that the transactions from the latest blocks look a bit like coin joins from Bitcoin, where you have a few inputs but more outputs.
That's right. So CoinShuffle++, anyone who's not familiar with it, is a system for creating. It's a non-custodial system for creating coin joins. And so basically the base technology is coin joins. But then the game becomes, how do you make a coin join in a way that none of the participants know, whose output is whose? And that's the trick that CoinShuffle++, delivers, which is that they basically take what I would consider are minimally complex, sort of mathematical components, and combine them into a relatively straightforward system for obfuscating ownership of the outputs. So it's like, it's not as, it doesn't have the downsides with history when it comes to like ring signatures, but it has, it's prunable. You can tell when everything's been spent, and it is sort of like a level above things like, say, Dash or Bitcoin on-chain mixing technology. Well, at least as implemented right now, because somebody could come along and just do CoinShuffle++, just like we do, except on Bitcoin.
It's also interesting that you have a section on this blockchain explorer that says total cost to attack, and right now it's about $126.7 million. Mm-hmm. And that's 20,529 tickets.
Okay, yeah. So the way these costs to attack work is that with Bitcoin, or a pure proof of work project, you go 51% of proof of work. So what you do is you calculate how much do the miners cost, how much would it cost to buy that many miners, how much will it cost for the facility and all that, and that's how you estimate attack costs. In our case, you need miners and you need stake. And so you need a lot of the miners and a lot of the stake. So that's why you see this curve. So the curve there is, it talks about how many tickets you've got, and then how much hash, what percentage of the hash power you have. I think it's kind of confusing the way it is there, but yeah, that's roughly right. It's basically an S curve.
Yeah.
Because think about it like this, right? The game is, you want to do reorgs, and that's how you attack it, right? So you're constantly trying to, and that really comes down to what I think is best described as a majority attack, because the way blockchains work, even if it's proof of work, is it's really voting, except you're voting with a CPU. So if you can get the majority of the votes on a block, you can make a block ahead, and then you can reorg it out, and you can just keep doing that. And then, in a lot of cases, you have to reorg to a certain depth before you can really make an effective attack. So it's like you make a depth 1 reorg. Okay, there's a certain cost to do that. And then what's the cost to do N of those in a row?
Okay, it's very interesting how this works. I'm not well acquainted with Decred. I just know the basic concept about it and how there's voting for everything. And to me, it's interesting to look at this and look at, for example, this block, which had 14 transactions. I can see that some of them are votes. These are the transactions. This one sent the most amount of DCR.
Yeah, that's a mix.
And
Isn't
it's
it?
a huge mix.
Oh yeah, that's a ticket mix. So that's a ticket split mix. And what you'll see there on the right is the big outputs. There's change, those are the small outputs, and then the big outputs are tickets, if I'm not mistaken. Yeah, the ones that are spent there, they're 250, they're all like 255 and change. Those are tickets. So the way we do mixing is we do it kind of like the old school Monero way. Monero used to have denominations. And then the denominations were how mixing would occur. It was a combination of ring signatures and denominations. And I believe that's how Bitcoin worked as well. So what we did is we have denominations, but there are a number of fixed denominations, and then there's a floating denomination, which is the denomination for ticket splits, which is that 255 number down there that you see. So each of those, if you click on one of those that's spent, then you'll see it go into a ticket. So those are effectively anonymous ticket purchases. And you see the 42s down there. The 42 is the that's one of the that's like a medium denomination. Our denominations are split by 4 to balance between anonymity set size and blockchain space usage. I want to say I think it's Wasabi. It's been a while since I've looked at Wasabi very closely, but Wasabi does powers of 2 for the denominations, if I recall correctly, to optimize for blockchain space, because with Bitcoin, blockchain space is the scarcest thing. So they optimize on chain space.
I'm actually impressed that you look at Wabi Sabi, which is their Wasabi 2.0 engine. They used to sponsor this show.
I haven't sat down and really taken a close look. I think the last time I took a decent look at Wasabi was, I want to say 2019 or 2018, when we initially launched our privacy features.
Just because I think it was that important. Was the first iteration. I think now they got even better, but they shut down the company, and it's unfortunate that privacy usually leads to this path. Well, but the community picked it up. You can find today. I'm gonna show it for the sake of it. It's wasabi.io. They have these...
Yeah, I heard they decentralized. Oh no, I guess they still have a coordinator. Every coordinator. So there's multiple coordinators.
Yeah, but I see a bunch of them shut down. It used to be many more. So now there's Ginger Wallet, which is a different implementation that still charges coordination fees. And now there are 2 others that are active. This one mixed 30,727 Bitcoin, which is a lot. And I interviewed the guy. His name is Crew. Mm-hmm. And you can see here all the details about this particular mixer. It has 50 minimal inputs, no fees. It's very interesting that this took off as a free market actor. There was no need for a company to run this anymore. It was just one guy with one computer. He decided to do this and take on the risk of dealing with free letter agencies. But I don't know. This is how it should be. You need people to be courageous and show the way to others that this is possible.
I'm totally with you, but I mean the way I think it should have gone is that the core, Bitcoin Core should have developed something like this in conjunction with these people and then decentralized it. And that's kind of like, this goes back to like, what do I feel like the path for Decred is kind of like a lot of the things I feel like Bitcoin should have done but didn't do is kind of like, that's what I do is I go like, oh, let's mix at the project level as opposed to at, hey, there's some random dudes who want to do this. And it's like, yeah, that's cool. And I'm with it and I support that. But like, let's work together at like the project scale to make it happen.
Yeah, I was gonna ask you this. First of all, there is only one privacy project that I know is being discussed in Bitcoin Core, and that's called deniability. And it's a function within the Bitcoin Core wallet that basically idly splits your coins to create some deniability. But that's gonna be a big issue when the fees get high and you're basically generating dust and you're paying some large amounts for that privacy. And I was going to ask you if you think that Bitcoin is ever going to be private. And that's, I think, the final step towards becoming fungible.
I think that if we went back in time 10 years and Bitcoin Core had really, developed privacy as a project level feature, I think that it could have been private, but My read is that it's very hard to, put the crap back in the horse, if you will, and and undo this, because even the most successful Bitcoin mixers, now all of those outputs are to some extent tainted. Okay, and then you go and try to, and let's say somebody gets paid by those. Now you go to an exchange and you deposit them. What's been normalized is it's been normalized that exchanges will KYC you and be like, boom, oh, you need to tell us where you got this, who gave this to you, I need their phone number, I need their address, oh, we're gonna freeze these coins and you can't have them, and until you tell us where they came from. And it's like that kind of, it's a question of normalization. Once you normalize being able to spy on everybody for everything, it's hard to go walk it back. It's like a very difficult process to reverse. And so, as much as, again, I support privacy, but I acknowledge that like it's going to become increasingly difficult on Bitcoin as institutions pile up coins. They're going to be like, no, we got to get rid of these bad actors. These people need to go to jail. And it's like, what are you talking about? And then look at what happened to Samurai. I mean, it's ridiculous. Like, it's a non-custodial service. Doesn't matter. They, those guys are in it now.
Yeah, I think Samurai is mostly guilty of speech. And in the case of speech, I just mean that they suggested that they might be mixing funds from Russian oligarchs. And it was more of a political decision than it was something against privacy in general.
I mean, it was like a provocative salesman kind of thing to do, to be like, hey, you over there, you should mix your coins. That is very different, in my opinion, from being like, oh, I've been, what is it, colluding with so-and-so, like, it's like, that's very different. So it's like, oh, what? You're going to point at a couple of tweets that where somebody said something provocative, that's ridiculous, and use that as the basis for a case? It's ridiculous.
I think this year has been horrible for privacy and self-custody in Bitcoin. Some of the services shut down, a bunch of people got arrested, but the number went up and the ETFs got approved, and it seems like the culture is messed up in the sense that people forget about all the bad stuff when the price is going up.
Yep. I mean, this is one of the luxuries of not having a lot of NGU, is that you don't have to deal with like institutions, using law enforcement as a stick to beat the crap out of people in your project. I mean, or who work, or who work on your project directly or indirectly. So it's, there are pluses and minuses. Being the top dog price wise means, that's the squeaky wheel. The squeaky wheel gets the grease. And so, I mean, that's, it's part of the game, but I don't like it either. In the sense that I think it does not bode well for the future, but I think it also, I mean, on the silver lining is it's also a sign of weakness, which is why go after these people who are mixing some Bitcoin? Who cares? But, it's to set an example or to try to, make people afraid. And so, I don't know. I'm not afraid, but maybe I should be. I don't know.
I was going to ask you, where do you see Bitcoin in 10 years and where do you see Decred in 10 years?
I don't know. I mean, I think Bitcoin is already, I think that in terms of price action, there's only so much more positive price action it can have, unless the US dollar hyperinflates. In which case, then of course, versus the US dollar, it goes to the moon, right? I think that basically most Western states are ready to go bankrupt to various degrees because they've run out of money. They spent money they didn't have. They made a lot of bad decisions. And now they're kind of painted into a corner, whether it's the EU or the US or the UK. Everybody has made all the same bad decisions to be like, oh, let's have a social Ponzi system that, or Ponzi scheme to take care of everybody, like a welfare state. And it's like, oh, wow, we didn't do the math. Welfare state's going bankrupt. I know, let's start a war. So I feel like that process is like relative to the current US dollar, value. I could see Bitcoin going to like potentially $1 million. But going much beyond there, I don't know if I see it. It depends on a lot of things. And so that's the kind of future I see for Bitcoin, and more institutionalization, less on-chain transactions, less sovereign money. More
but how is it going to survive if there is no on-chain transaction? Because the whole bet behind Satoshi Nakamoto's system is that miners are going to be subsidized by transaction fees.
Well, I think that if there's uptake of Lightning Network, there's still going to be, channel opens and channel closes, and there are going to be fees from stuff like that. But I think the institutional stuff is going to like increasingly become like a lump of stuff that doesn't move. So like the fraction of the coins that don't move, I think is going to continue to rise. And then, at some point, one of these governments is going to go, and economies is going to implode, and then those big custodial players like the ETFs, then things are going to get really interesting, because it's going to be like, well, what happens to all those assets? Because it's all set up to collapse in a very questionable way. So I think that exactly how it all breaks out and breaks down and plays out, it's going to be hard to see. I mean, with Decred, hey, I'd love it if if Decred's value relative to Bitcoin would rise. And I think that it's actually logical to expect other chains like altcoins to have their exchange rate rise relative to Bitcoin, if for no other reason than at a certain point the valuation of Bitcoin will be maxed out. That is, people will be like, this is where it is. Hyper Bitcoin is that, or nominal hyper Bitcoinization has occurred. Now, where do we get the value from? Like, how are you gonna sort of mine value or extract value? You have to start moving into other assets. And so I think that I was saying this earlier is that 2017 was like the premature pile on into alts. And it was too early. And what we'll see is that as Bitcoin goes higher and higher, it becomes less and less attractive from the perspective of investment, and then they'll seek returns elsewhere, whether it's Decred or Ethereum or Zcash or whatever. So and I feel like it's also a game to stay alive. Like we're pretty good at staying alive. We keep it lean, we keep it mean, and not a lot of other projects do not do that, because they're here to pump and dump, not stay alive for 20, 30, 40, 50, or 100 years. And that's sort of the way I try to build things. I try to build things for decades, multi-decade scale, as opposed to, I hope I get rich and I can dump all my assets and then have a whole bunch of fiat. Like, I don't care about that. I'm not here to do that. And so that, I'm hoping that longevity plan is something that is a play that's rewarded in the longer run.
Yeah, I hope so too, because honestly, it doesn't seem like we're gonna get that Bitcoin-only future that some people dream about, for the simple reason that Bitcoin doesn't scale and doesn't allow use cases to get built. And the only way they can work is if someone does what Casey did with ordinals, right? When he just built it without asking for permission and without expecting the core developers to grant him some sort of soft fork to be able to build stuff more efficiently. He just did it. He saw the market for it and he built it. And right now I see Paul Stortz. I spoke with him. He wanted to get on the show and then he changed his mind because he's changing the way that he wants to propose drive chains from this soft fork that's called BIP 300 to what he calls CUSF, which is core something soft fork. He's trying to bypass the entire core system by talking directly with miners to activate.
Yep. And I mean, these are the things that it's like, I feel like I saw this stuff and like other people are like, oh, you're crazy. You don't know what you're talking about when it comes to sovereignty. And it's like, people forget, like, reread the white paper. The way blockchains work and the way you solve the Byzantine generals problem is voting. Proof of work is just voting with a CPU. And so, voting is really the magic. It's a sortition. It's a cryptographic sortition. That's the magic. And I feel like people forget about that. And, in order to, make progress with Bitcoin, people have to do kind of extreme things, whether it's like, the user activated soft fork or the, CUSF or whatever kind of SF there is, however you're going to activate this stuff, it's like, it's a real hurdle to cross. And, it's not going to get any easier as time goes on.
Oh, the funny thing is that high priests in Bitcoin hate voting, and they are actually fans of monarchy. Guys like Saifedean and a bunch of others who are influential, they get invited to conferences, and then they get on stage and they say that voting sucks and that this should not be the way.
It's the whole basis of Bitcoin, unfortunately for them.
Well, yeah, everyone in Bitcoin votes with their hash rate. And there's also that situation with full nodes, since now they're separated. In the white paper, it's ambiguous. All miners get described as also nodes, but the separation came later, when clients were not necessarily miners anymore. But Satoshi was disappointed, honestly. We have a collection of emails where he sent an email to Laszlo saying, could you please stop mining with GPUs because I want people who onboard Bitcoin to be able to get coins with their CPUs. And Laszlo didn't do it. He basically continued mining with his GPUs and decided to give back some of the coins to the community. That was his approach. He bought the pizzas and stuff like that. And there was also Satoshi's response to the first mining pool being created, which wasn't hostile, but he didn't seem happy to see it either. It's just that his assumption about what Bitcoin would be was proven wrong very fast. Within 1 year, people came up with something that turned around the whole consensus system.
Yeah, I mean, it's what is it? It's the unanticipated, changes that that upset people, and it's like, hey, this is supposed. I was trying to make it fair so everybody could get some, and it's like, well, guess what? I think that the irony. I mean, this is something I feel like I see a lot, I think about a lot, but I feel like most people don't get it, so I can't talk to them about it. Do you think it's ironic that the whole industry of cryptocurrency is about creating fairer games, whether people realize it or not? Fairer games of various sorts. You get people to play them, and then people are like, "Oh, wow, this is way better than whatever's out there." But the force you have to compete with is people constantly trying to rig those fairer games. So you want to make a fairer game? That's great. Well, guess what? There's always somebody out there who's a jerk who wants to turn that fairer game into some rigged garbage. And I've had to deal with that with the miners, and it's like funny. It's kind of funny that I didn't realize I didn't realize Satoshi had done that. So that's funny. Is Satoshi had their own issue with miners.
Yeah, he was trying to socially pressure someone like Laszlo Haniec, who was one of the first GPU miners. Of course, it did not succeed, and then what can you do? We can speculate that Satoshi maybe built something else. Some people like to pretend that Satoshi was behind Monero or whatever.
Mm-hmm.
But it's funny, because if you look into these emails, and of course there's a lot of room for interpretation, and there's a lot of credit that's being given to Satoshi, even though he was obviously a flawed human being. And I think Jeff Garzik did a very recent series on YouTube where he explains why he believes Bitcoin was not made by the CIA or the NSA or by a team of developers. He believed it was just this one guy who had an idea to piece together a system which was flawed in the beginning and required people like Gavin Andresen to make it more professional looking. And he didn't know exactly what he wanted. He did some optimizations that were premature. He envisioned some use cases that never took off. So it was a mess in the beginning, and it's normal for it to be so. So that's why maybe we should not look into Satoshi as this sort of northern star and assume that he always points into the right direction. Because there's a lot of data that we have now that he didn't, and there are a lot of open source projects that were built and can be used to build something cool, rather than constantly look for whatever it was that he said 15 years ago.
I mean, I feel like as somebody who's built a lot of stuff, I've built a lot more than most people. My kids are coming home, so we probably have to cut this short. I'll try to leave this on a high note. Something to consider about Satoshi is the software. I don't think there's any way that the paper, the full node, and the GUI that the thing came with were all written by one person, or that that person also was the Satoshi on the forum. I think those skill sets are all very distinct, very different. Any one of those things, sure, one person could have done it. One person could have written the paper. But I mean, here's something else to think about the paper. The paper is probably one of the more significant, like computer science and mathematics papers of the past 20 or 30 years. And it was just dropped out there in public like nothing. And most people read it and were like, this is junk. But a few people were like, whoa, wait, there's something here. And that's something so I see multiple pieces of software that were very difficult for a single person to do, a paper that would be, the kind of the work of a single person, or could be, but it's also mathematics that's so far ahead of where things are that it blew people out of the water to the point they didn't recognize it for what it was. So that's my take, and you can sort of follow the breadcrumbs from there to to get to where you need to be. And everybody's going to have a different interpretation, of course.
That's very cool. So, Jake, how can people follow you, and what do you think is the best way for them to learn more about Decred?
If you want to learn more about Decred, you can jump on our project chats, chat.decred.org. We have a Matrix server. We also have a fair amount of content on Twitter. That's what is it? You can follow the Decred project. It's Decred project, and then I am behind text. Although I have potential visibility problems on certain platforms, so you may or may not see my content very often. And then let's see. Good, yeah, like our project chats, Twitter, and we're pretty personable. Just don't show up and be super hostile or be shilling garbage in our chats, and we're all good. So the revolution will not be centralized, and we'd love to hear from you if you're interested in participating or talking to us.
Also, check out Bison Wallet. It's very cool. You can see a demo earlier into this episode. Thank you very much, Jake. Thank you also, Phoenix. I know that you'll be watching to this point. I know you're that kind of guy. And thanks to everyone who interacted in the chat and commented and shared this. And also thanks to the sponsors, once again, SideShift, Layer 2 Labs, Starkware, and